Alright, now everything should be working. You guys should see the desktop with the overlay. Correct, Capital Hungry live stream. Breaking news to the left. Is it slick? Is it slick? Come on. Everybody on the YouTube, welcome to a Capital Hungry live stream, live London stream. We will be using fundamental and technical analysis to map out potential trade ideas on XAUUSD, GBPJPY, EURUSD, USDCAD, as well as Dow Jones, which is basically going to be a repeat of the market update webinar the Capital Hungry private members got this week. So it's a good teaser for you guys for free, I guess. And we're also going to be using some of these key levels, market structure, and areas of interest alongside some of the London session volume to see if we can take any potential scalp trade ideas as well as we're looking at market sentiment indicators, headlines, and other information. This stream probably be running for maybe 2 or 3, 4 hours, depending how the market is moving, how the new week starts off. It is fairly early into the week, so we aren't being too aggressive just jumping into any trade ideas. We are going to take it slow and see what potential trade ideas we can map out as we are looking at the fundamental sentiment and everything else. There are a few fundamental topics I want to discuss over the stream as well, just in case, like if markets are slow, we have things to talk about such as Brexit, the Euro-US trade talks, some of the US stimulus talks, some of the economic events we have going on throughout the week, but mainly the central bank speakers like Christine Lagarde for the ECB, Jerome Powell in the morning during New York session, and discuss what is going on with coronavirus around the world and how it can potentially impact markets as well. So we're going to be talking about a lot of those things. We're also going to be looking at the lower time frame market structure and price action for potential scalp confirms. And yeah, looking at some of the news headlines as they come. For those of you who don't know, over the weekend and through last week, we have had a lot more mixed headlines, but more towards the market fear side, where we've seen uncertainty with US stimulus. Of course, we have the potential of that no deal Brexit and going by the Australian style trade rules, which is just having no deal and following WTO trade rules. And we have uncertainty around Euro-US trade talks, as well as just overall coronavirus stuff that is leading to lockdowns in areas such as like the UK, where we're seeing those tier 3 lockdowns. But on the flip side, in North America, you have political leaders like Trump who are more optimistic around coronavirus and talking about how it's not that big of a deal. Maybe later we can watch like one of the YouTube videos. I don't know if somebody sent it in the banter chat in Capital Hungry, but somebody's been sending me videos of Trump during his rallies, like dancing, and everybody in the crowd is like not wearing masks. Nobody is like doing any practices of social distancing. So coronavirus, as per its market impact, has really been like region dependent as well. So we'll see how that goes too. But what we want to take a look at here is understanding the market sentiment by taking a look at US dollar and Japanese yen. From an intraday perspective, buyers have been in control. For example, the US dollar has created intraday highs at previous key level of 93.8, as well as holding intraday bullish market structure. And at the same time, the Japanese yen has failed to break previous intraday lows at 94.3 while respecting bullish market structure as well. And we've noticed that the VIX, which we also have open here, but just through the session, I only like to look at US dollar primarily in the yen. We can also notice the VIX has failed to break previous lows and has created a very strong support around 25 multiple times now, and is showing potential to go and meet previous highs, where of course the VIX is the volatility index, which shows the inverse information of US stock trading investor behavior. So when the VIX is bullish, it shows more fear from US stock investors in US equities, which in turn can tell us some information about market sentiment as well. So what I'm trying to take a look at here is if we have continued negative headlines as per global fear relating to coronavirus, lockdowns, political tensions such as Brexit, Euro-US trade talks, then there is that potential for the volatility index, Japanese yen, and the US dollar to continue bullish, where we can of course use these confirms of market fear in turn with our analysis of playing potential shorts on GJ, sells on Euro USD, sells on gold, sells on buys on USDCAD, and sells on the Dow Jones, right? So that's just what we're taking a look at as per our sentiment indicators. At the flip side, we are also noticing some exhaustion on global equities with the potential to is the sound volume okay? I see some people complaining about the sound volume in the YouTube chat, but I think it's pretty normal. Sound volume okay, yo? Zoom chat, YouTube chat. Yeah, you guys gotta put your audio up, you know? I think I'm talking pretty normal. Should be, right? Yeah. Yeah, it's maxed out the audio, so and I'm fairly close to the mic as well, right? So also, if we have that market fear coming to the scene and we notice global equities take a dip on that uncertainty and that optimism fade out, it'll give us further fundamental confirms alongside some of the current technical structure on our pairs that are risk currencies versus safe havens. For example, GBPJPY, Euro USD, we are primarily in a sell bias from the intraday perspective. Just what would be ideal is a break above 136.5 and for the new weekly top wick to retest this bearish market structure around 137. But if we do get those confirms above the key level, we can potentially take those scalps up if we have the lower time frame price action and market structure confirms, which we will look at. But from an intraday perspective and higher time frame perspective, with the Brexit negativity, how we have negative comments from the Bank of England, and how we have Japanese yen holding more strength alongside the technical structure of noticing overall bearish intraday structure still being respected and sellers still in control, a break of this intraday bullish market structure and sellers' impulsive candles, lows being created by sellers and a potential shift in structure to create another lower high, and then come down to revisit these lows after that pullback to generate more liquidity and seller order flow in the market. Of course, from an intraday perspective and a higher time frame perspective, safer sells would be below 135.5, these previous lows, as well as this higher time frame key level and psychological price level. That would be the safest sell option, alongside understanding that we would possibly see the UK equities turn bearish to potentially revisit lows, showing investors in UK equities are losing their optimistic faith in the United Kingdom stock market, as well as noticing Japanese yen still continuing bullish to previous highs, and the no deal Brexit being taken as negative. This no deal Brexit is going to be tricky because Brexit has been going on for a very, very long time. It has been going on since 2015, this back and forth and this uncertainty. So this potential no deal, even though it seems like it would bring a lot of negativity, at this point in stage in Brexit, it could be taken as potential optimism. You get what I'm saying? That there finally is some change coming to the UK and Euro trade deals and to the UK economy, and that potential change, if driven the right way by politicians, can be taken as optimistic or a chance for the UK economy to grow even stronger, if that makes sense, right? Because if they are just allowed to follow the WTO trade rules and follow a similar Australian style trade deal, then I could see the UK politicians really preaching the potential for like a stronger UK comeback from an economic perspective, if that makes sense. So I really want to see through this London session how those headlines over the weekend, which was of course shared in the trade room, so these headlines over the weekend, such as the negative Bank of England headlines around the downside risks, are still remain from for the UK. The British business groups sound the alarm over a no-deal Brexit. The UK governor says EU's decision at last week's summit and in fact ended trade talks. So we want to see how this is going to get digested through the first London session now and by the European and UK investors, okay? So what would be ideal for us for the new week? As we can see, we are overall still in very bearish market structure, and with this uncertainty, if we fail to break above these previous candle body highs, I don't see much reason on a higher time frame perspective unless we broke above 137.8, 138 flat key round number, and we had that no deal Brexit taken as optimism, then I could see potential to revisit these 142 highs. Otherwise, I'm just looking for this week to create a potential top wick at those areas of interest we have highlighted on the 4-hour structure, and then start to take the sells down. And like I said, I would only see the key sells above like around 137.2 area. So let's just go back to the hourly and the lower time frames as well. So for now, we're just going to keep it as is and just see how pre-London runs, how London Open runs, and then see if we can also map out any potential scalps as we'll look at the lower time frame structure. But before I start looking at the 1 minute lower time frame price action and market structure for potential trade ideas, I do just want to take a look at how I'll take a look at intraday analysis for gold, EU, and USDCAD as well. So for gold, of course, we can see we are still in this higher time frame intraday bearish market structure and in this technical wedge pattern where overall, let me clear all this so you can see it easier. Overall, you can see sellers are in control. We have this bearish market structure. We have intraday lows being created by sellers, right? And we also have the potential of that US dollar strength, okay? So if we do not break above this higher time frame intraday bearish market structure and we do not have this US dollar strength get waved off, where confirms of US dollar strength being waved off would be if it breaks this bullish structure and comes below these previous highs at 93.56, right? Then the inverse correlation between US dollar and gold has been more prominent, meaning when the US dollar is very bearish, gold has a higher potential and probability of being bullish, and the inverse, of course. When the US dollar is very bullish, gold was seeing more of a sell-off because the secondary in the gold spot quote is the US dollar, right? So that's why it's always a good idea to keep an eye on the dollar index and keep an eye on the Japanese yen standalone, just to see how investors are moving liquidity and how those are moving on an intraday perspective, because you can use those as confirms while you're looking at some of these US dollar or Japanese yen dominant pairs like the GJs, the EUs, the USDCADs, for example, right? So for gold, we already have our predetermined analysis. So you can see we did have the clean buys play out above 1902 key level. I am just looking for the weekly candle to create its top wick at 1912. I would only take safer buys above 1923.5. If we have the dollar index bearish if we have a hawkish Federal Reserve, which also would weaken the US dollar and boost US equities, meaning Jerome Powell tomorrow morning brings more US economic optimism, which I doubt, and if we get a break of this bearish market structure, a break of 23.5 key level, and this order block and resistance area to the left, those would be all the confirms I would need to take the safer gold buys up and play that risk versus reward where we would break previous highs and have a higher potential to correct that downside impulsive move and revisit this order block area to the left, right? That would be the safest options. Otherwise, even if we come back just to start this new week and we pull up to 1912, or even if we pull up to 1923 or this bearish market structure and fail to break and then come back below 1912, that would still show me sellers in control as we fail to break above previous highs or even retest previous intraday highs created by buyers, and we fail to break above the bearish market structure alongside watching the US dollar strength or weakness, where if we see the US dollar continue that strength, then we do have the potential to take those sells, and the safest sells would be below 1897. Higher risk sells would be a retest of 1912, lower time frame rejection, that is higher risk, higher reward. If the US dollar continues its strength and just does a pullback from that point, we're looking at the dollar index here. Like if at the same time gold goes to 1912, the US dollar comes to retest these lows and fails to break just to grab more liquidity and then continue its way up, that would also show us higher potential for gold to reject 1912 and these previous intraday highs to take higher risk sells, right? And then the safer sells would be below 1897. This is the intraday and potential swing trade ideas. The safest sells below 1883. The main bias is sells if we have that US dollar strength given by the Feds as well, which we have Jerome Powell talking New York Monday morning, of course. And then the safer buys, I would need all of those confirms discussed. Okay. And then when London session actually comes is when we will zoom into the lower time frame and look at potential scalp ideas we could take advantage of. So just let me clear these arrows and some of this wording so we can have some nice clean charts when we're observing the 1 minute lower time frame price action at these key levels. You can see these higher time frame key levels plotted by historical data points do have a lot of respect even in current price action, right? Like look at this reaction from 1923.5 all the way to the key level 1883, and anybody in Capital Hungry private chat will tell you that we have been using these gold price levels across the board since maybe at least 6 months now, and they still get respected to this day when we're watching lower time frame reactions on it. So when we are scalping gold, we will only be executing with confirms at these lower time frame key levels. Sorry, on the lower time frame at the key levels exactly. I do not like playing gold in between the higher time frame historical key levels. That's just my personal preference. I would rather wait for the confirms at the key levels. But I'm just going to keep it on the 1 minute because I do want to watch potential reaction at 1912 for signs of buyers exhaustion and sellers to potentially enter the market and then continue the way down. Or if we break above 1912, I want to see if we start respecting some of this lower time frame bullish market structure that is developing, and then catch any buys as a scalp above 1912 if we do have that break and retest above there. GJ primarily on an intraday and higher time frame perspective because of the no deal Brexit and how it can bring uncertainty to the UK economy. And I really just want to see how this London session digests that information. And through this London session, we will have more Brexit headlines, which you guys will see pop up on the left here. Can you guys read the headlines on the left? Should be able to, right? So you guys will see the headlines come up there on the left. I want to see how that information is absorbed. But if we do get that break and retest above 136.5 or that retest of 136.2 and fail to break, we can take those potential buy scalps up to retest this bearish market structure and then watch the reaction by buyers and sellers at that key price point where we would be retesting 137 flat whole round number psychological price level and that bearish market structure. And then if we reject that point, this would be higher risk sells right back down to the previous lows. Of course, medium risk sells would be below 136, and the safest sells from an intraday perspective and a higher time frame perspective would be below 135.5. So that is just some of the intraday analysis when we are understanding the Japanese yen is holding strength. There is a lot of negativity on the UK economy, and there is the potential for UK equities, even though it has opened up bullish to start the week, it is still very bearish in intraday structure and has potential to revisit these intraday lows. So we just want to keep an eye on that. And we do have negative comments from the Bank of England, Bailey, as well, where he's talking about there's still a lot of downside risks that exist for the UK economy, right? So I really want to see how the ending of trade talks between the European Union and the UK gets digested. If you weren't here just a few minutes ago, what I was discussing was that because Brexit has been going on for such a long period of time, for over almost 5+ years now, there has been so much negativity around it, where this potential ending of trade talks and going forward with just Australian style rules could actually be taken as optimism, because it can show a potential change in the progress to come, right? Because then we can have these UK politicians such as Boris Johnson say, we are going to rebuild the UK economy even stronger than it was before, etc., etc. And this can actually bring some optimism, because GJ on the very higher time frames, like when you look at it on the monthly from a macro perspective, is at pretty low points, right? Like look at GJ really on the monthly, and from these points, if this no deal Brexit gets taken as optimism, sorry, I didn't mean to do that. From these low points, there's basic concepts that go across all trading styles, right? You have buy low, sell high. This is from a macro perspective and an institutional higher time frame perspective, a very, very strong area where you can buy low and get a potential repeat of history. Let me highlight it better here so I don't have the drawing. See this previous repeat of history after the 2008 financial crash, where we peaked these macro lows. And see, after this is when Brexit first started hitting the scene, was like the end of 2015, that late summer. This is when Brexit really started hitting the scene, so we never got to retest those previous highs. Basically, you guys can watch the GBPJPY timeline, fundamental timeline breakdown on my YouTube channel. I have a full breakdown of GJ from the 2008 financial crash onward, breaking down the price action and events that took place, right? But anyways, from a macro perspective, if we have this taken as optimism and GJ breaks above, let's just say 140, and this bearish market structure, we are going to get a correction of this downside move and start to run into some bullish structure in a repeat of history here, right? You can see strong impulsive sell-off, low created by sellers, strong impulsive sell-off, low created by sellers, a pullback in correction / consolidation phase, pullback, correction, consolidation phase, very low macro points. These are historical low points. If we have that optimism in a break of this structure like we did here, and we get that upside move, we can start playing GJ buys on an intraday perspective every single day for the next period, for the next few months, right? Your main bias on GJ, if that optimism holds and coronavirus fears fade from the market, would be to wait for pullbacks on the intraday and just play the buys. You get what I'm saying? Because you have that historical repetition behind you. History always repeats. There's always different fundamental catalysts, different names and politicians and different characters, but the story keeps repeating on an economic cycle perspective and on like a fundamental catalyst perspective. Markets are either based on investor fear and economic data, and it's either investor fear or investor optimism alongside history repeat. The repetition of history is what creates technical patterns. All right, keep that in mind. The human behavior around repetition and the repetition of history is what creates those technical patterns. Okay, but yeah, we could get that repeat if this no deal Brexit is taken as optimism. So we just have to keep our eyes on that. Let's go back. And if you guys want to understand that in more detail, just go to the Capital Hungry YouTube channel. And it's this. See this timeline of GJ fundamentally and current analysis? This video will tell you that exactly. 23-minute historical analysis and breakdown, and what you would need to look for and why. All right. So gold continuing to head up 1912. GJ, let's go back. How do I make the stream so that people can rewind them? Oh, that's only later. But yeah, so GJ, we're looking at the 1 minute. We have these psychological price levels mapped out based on the quarter point theory, where and just on back testing, where in between larger, higher time frame 100 pip ranges, it has been back tested on the lower time frame that you see reactions by buyers and sellers depending on the trend at quarter points. And on GJ, these quarter points back tested, if you guys go on GJ and map out your 0.00s, your 0.200s, your 0.500s, and your 0.800s between the levels, right? Like 135.5, 135.8, 136. I'm not saying it's something you can 1000% just trade based on, but you will notice the most lower time frame reactions at these points. So I like to map out these points in between the higher time frame key levels of interest, right? I just want to map out some of this lower time frame bearish market structure as well, because we are getting a potential break of it here, and we are getting some potential lower time frame bullish market structure developing, right? So let's clear that out. So if we continue, that's why I said even if we do a pullback at London Open to 136.2 and come back above the bullish market structure at 136.5, we could take those buy scalps up with a break and retest and a support made with a support made above that key level 136.500, right? Otherwise, the safer sells on the lower time frame would be at a break and retest below 136.200 or 136. Because if we break below 136, we're continuing to follow that overall intraday bearish trend. And we're also coming back below this lower time frame bearish trend and breaking this minor lower time frame bullish market structure and coming below the psychological price level 136.2. I want to see how the FTSE runs through this first London session, as well as the Japanese yen. I want to see if it continues its bulls, and we're going to keep an eye on the US dollar. I'm just going to put the US dollar on a candlestick chart and on the 30-minute, because it is showing some potential exhaustion for now. US dollar and yen are great to watch while we're trading pairs like EU, UCAD, GJ, gold. But yeah, so gold is making its way to 1912. I want to see how buyers react to our key level. where we already expected that upside there. Okay, so Euro USD. You guys understand what we're looking for from an intraday perspective on gold and on GJ. And what we're going to be looking for is some potential scalps. We're going to be playing this lower time frame structure and these psychological price levels. The scalp buys we will take will be 30 pips. If we continue to respect this structure, remain above bear structure, and come and break and retest above 136.5, we have that 30 pips to that following quarter point at 136.800. Which is a great scalp. When we are trying to scalp just using the session volume, we have to remember to stay in the scalper's mindset and understand we are just playing those 10, 20, 30 pip ranges, and anything above that is just extra bonus pips, right? We have to be really cautious while watching the price action and headlines and keep ourselves risk-free as often as we can, because when you're scalping, the key is to take smart trades, protect your capital, and then be in and out of the market fairly quick and not lose your focus. But yeah, let's see how this pumps up here. And if you guys want to understand in more detail, because it's way too much for me to talk about all the confirms, about what we do on the 1 minute. This again on the YouTube channel, Scalping 101 series. It's the first one's 1 hour, part 2 is 1 hour, part 3 is 1 hour 50 minutes, part 4 is 2.3 hours, 2.5 hours, sorry. You can watch all of these videos to understand some of the concepts we are talking about in these streams as well. So then when you come back and I'm doing these streams, you can better follow along and understand as well. So yeah, take the time to watch those scalping series. Take the time to watch like the GJ fundamental historical timeline, some of these analysis videos, some of the previous streams. It'll really teach you a lot of info, and it'll really make you eager to want to come back for more, I swear. So yeah. Okay, so Euro USD, our intraday trade ideas, as we have had more market fear, we want to digest how the Brexit tensions will impact both EU and UK. Of course, it would have a more negative impact on the UK, but we want to see if they take it as optimism. But as we've had US dollar strength and that potential of further EU shorts as bearish market structure has been respected, and this long-standing bullish market structure has finally broken as higher time frame buyers exhausted. We had that Brexit negativity, we had that US dollar strength, and we had this intraday low created by sellers, right? From this peak high point to this peak intraday low point. This corrective pullback did not fully correct the downside move, did not break above higher time frame key level 1.184, and it created a lower high and a point where we could highlight this bearish market structure. What would be ideal for the new week is a pullback to this bearish market structure, continued US dollar strength and price action exhaustion at that point, and then continued sells down to this previous low, as well as a break and retest of those lows at 1.6300. Okay, I would only take and this is intraday analysis, swing analysis, okay, like hundreds of pips if we get these confirms. We will talk about potential scalps as well. I know everybody on YouTube is always horny for fast scalps, fast money. Don't worry about that, right? But anyways, we'll talk about that after. The safer buys with your technical and fundamental confirms would be US dollar weakness and the US dollar breaking and retesting below 93.6 and heading down towards 93.300 in this previous price sensitivity area, as well as higher time frame key level. If we have that US dollar weakness, and if we notice that Euro equities, which I use and look at the German DAX for an example, you could just look at Euro stocks as a whole if you really want to. If we also notice Euro equities are going to continue bullish as well, dollar continues bearish, we get a break above our key level, which would be breaking previous intraday highs by buyers and breaking this bearish market structure, then those would be the safer buys up to previous highs at 1.199 higher time frame key level, right? For a potential scalp, if we do get the break above these 1 minute highs, this retest of that bearish structure is 40 pips up. So now, once we understand that we do have, on a macro perspective and higher time frame perspective, that Brexit negativity, that Euro-US trade talk negativity, right? We do, and we have that potential for more intraday sells, but we do have the potential for that pullback. On a scalper's mindset and a scalper's perspective, that pullback with the lower time frame price action confirms is a nice trade. That's a nice 30 to 40 pips up. So let's look at the 1 minute price action to see what we would need to take those scalp buys up. So right off the bat, I can see some minor bearish market structure, and I can see this order block and price sensitivity area at our previous level 1.72. So to take scalp buys, we would need a break of this minor bearish structure and a failure to break these 1 minute lows, which is also at our key level, and a break above 1.72 retest, lower time frame support formed, and we could take the scalps at least up to these previous 1 minute highs, which is 23 pips, and that area of interest at 177. Okay, if we do not get those confirms and the US dollar holds strength through London session, then we will continue to play this bearish market structure and take the sells below key level 1.6850 as per the intraday analysis. Cool. Gold's still making its up, and we're going to watch the reactions at 1912. If you guys can see the headlines here, Brexit, UK Housing Secretary says EU needs to show flexibility. Brexit, UK Housing Secretary Jenrick says we don't want a no deal, but we need to move forward. Brexit, UK Housing Secretary says unless the EU comes back to us, we will leave without a deal. And this is still being taken. This is not having a direct negative impact just yet. Like that didn't cause a meltdown. A lot of those negative Brexit headlines over the weekend have been absorbed. Brexit, UK Housing Secretary says the whole country needs to get ready. Let me fix this for you guys here. That should be better. Okay. Any questions in the private chat Zoom? Let me pull this up. Everybody's good. Any questions? I'll check the questions in the YouTube chat shortly. Let's observe that. Okay, UCAD, USDCAD. Of course, we're going to continue to watch the dollar strength, but from an intraday perspective, the safer buys would be above 1.325, the previous intraday highs, if the US dollar continues its bullish run and breaks above these previous intraday highs when we're looking at the dollar index, and if oil continues and fails to break above its previous highs and turns bearish. If we do have market fear around coronavirus and uncertainty around global lockdowns, that alone can drive the price of oil down as it starts to threaten the demand and consumption of oil. For example, when we had coronavirus really caused the global lockdowns, there was a massive oversupply and overstorage of crude oil, and a massive oversupply and overstorage, and a low demand because everybody was on lockdown. You had all these factories and production areas that use oil were shut down. You had millions of people off the roads and not driving anywhere. So global oil demand went down, right? And you had a heavy supply. Now, how does this impact USD CAD? Of course, oil and Canadian dollar have a strong correlation because the Canadian economy brings in a lot of revenue through oil exports. Okay, so if we have oil bearish and USD CAD and US dollar bullish and USD CAD break above 1.325, this would be safer, higher time frame and intraday buys to the upside. Otherwise, if we continue to respect this bearish market structure, as we had a strong seller's impulsive break and an intraday low created, the safer sells would be a break of this intraday low. All right. From a scalp perspective, we are noticing a lower time frame support being formed. And we're just going to identify this lower time frame bearish market structure. Safer scalp buys on GJ would be, safer scalp buys on USD CAD. I was looking at somebody ask a question about GJ. Safer scalp buys on USD CAD would be, of course, if the US dollar continues its strength through London, we get a break of this 1 minute price sensitivity area, as well as a break of this minor bearish market structure. We can take that initial buy scalp of 20 to 30 pips up to this previous price sensitivity area. Otherwise, if we continue to respect this lower time frame bearish market structure and the dollar turns bearish through London and breaks the structure, we can take the sell scalps down at a break of these 1 minute lows. Or safer as well is below the key level. So we're just going to watch that accordingly through London session. But I'm more waiting for the intraday trades. I don't scalp as often, but when we did scalp, that is what I'd be looking for. And gold is coming towards 1912 like we expected as per that intraday analysis. We're going to watch that and see how GJ reacts at key level in this. We could see on the lower time frame, and I'm going to discuss this more when we're watching the price action. On the 1 minute is where you see buyers and sellers reacting to exact price points. So you can see how many times this high has been peaked, where you might not notice that on the hourly or 4-hour chart, right? So look at the amount of times this exact price point on the 1 minute has been rejected and failed to break higher by buyers on GJ, right? This is telling us that we need more liquidity to break this high point, which will either come from a pullback or a consolidation phase to generate more order flow in the market. And it's also telling us that safer buys would be above a break and retest above this point or above our key level 136.5. I do not want to take sells here just for these initial reactions, just because we have some live Brexit headlines where it's really some mixed comments, and I want to see how it gets digested by investors through London session. And it's only pre-London hours right now, around 2:30. So I want to watch how this 30-minute candle closes, when we'll zoom out and take a look at that in about 5 minutes. And if we can set up that potential buy scalp for that 30 pip squeeze to 0.800 if we have the markets more optimistic to start off the week, right? So safer buys would be above 1.72 on Euro USD, up that range, and at least to test these previous highs for scalps. Otherwise, sells, we're going to continue to play this lower time frame structure and a sell below 1.685. Gold, we're watching for reactions at 1912 for potential rejection and exhaustion to retest this bullish market structure that is developing, and then see how that starts to run and if we can take buys. But we're just going to watch the reactions at 1912 on the lower time frame first, that higher time frame key level, which we're just about 10 pips away from it, hit about 1911 there. So either we're taking buys at higher risk buys at a retest of 0.200 and fail to break, or the buys above 136.5. I would only take sells if we broke below 0.200 or broke below 136 and the Brexit headlines were absorbed as negativity, and we notice FTSE 100 turned bearish, as well as the Japanese yen holds strength through London session. USD CAD, I would only take buys if we have that market fear and uncertainty, which brings that US dollar strength. If we notice the US dollar continue bullish, and if we break above this lower time frame bearish market structure and these previous minor 1 minute highs around 1.32. Otherwise, we're going to respect this bearish structure and take the sells below 1.31600 if we have optimistic markets. Okay, Dow Jones. Now for the new week or the previous week, and if you guys were on Wickstone live session where I was a guest, we caught these pullback buys as we respected structure and we had more optimistic retail sales data. But we can notice that buyers failed to break and retest previous intraday highs, which we also see this was a very strong sell-off area around the 29K, 29,100 price point. So it really is going to depend how this week starts off. It would be ideal for me to get a pullback to 28, around 28,300 previous intraday lows and then continue the move up, or safer buys would be above 29K from an intraday perspective. Now for US30, we have to keep in mind that we might see it potentially range until we have Jerome Powell speak during New York session, right? So Jerome Powell of the Federal Reserve is speaking during New York session, and we want to keep an eye on the US coronavirus stimulus talks, right? We can notice that previously when Trump said there would be no stimulus talks, the US stock market did not take that well, and we had that impulsive sell-off. But that impulsive sell-off, even though it was a very strong bearish engulfing candle, technically, fundamentally, it had no reason to continue selling off, as an hour later he went against his comments and said he is still up for stimulus talks, and we created new intraday highs. The point of that is that we can understand investors on the US stock market do take the stimulus talks quite seriously, because it shows if US consumers and the people who lost their jobs will continue to get economic and financial support. If they get financial support, they can continue to spend money in all of these corporations and these different sectors that support the stock market, right? So if they approve that US stimulus and go through with it and give that further support to the US economy and the US people, that will weaken the US dollar as a safe haven currency, and also bring more optimism to US equities, where safer buys would be above 29K flat or break above these previous intraday highs at 29,100. I really just want to stay off Dow Jones until tomorrow morning, because it's still very early into the week, and I want to see what comments Jerome Powell makes about the US economy. If he talks about more economic downside risks, if he talks about more financial stimulus by the feds is needed, this will actually have a negative impact on the US equities and a positive impact on the US dollar, as it increases US dollar demand, but it brings uncertainty to the US economy, which of course brings uncertainty to the stock market and all these companies that operate in the US economy and in those various sectors. So we're seeing very strong rejections there at that exact same price point. UK Housing Secretary talks to Macron, I think France's president, whatever. Hope you come forward with small but important changes. Nothing too serious yet. UK Housing Secretary said it'd be sensible for the EU to go the extra mile. So far, we are seeing multiple failures to break at these 1 minute high points at around 136.4. And this is the new 30-minute candle, so it could just be making its lower wick. But if this 30-minute candle closes below 136.200, this would be safer sells down. All right, so let me check out the YouTube chat to see if there's any questions. Everybody in the Zoom chat is good for now. Then I gotta go to the washroom after we answer some of those questions, and then we'll see how London Open runs, and we'll watch some of the price action on gold, GJ, and Euro USD. So pretty close to 1912. We are seeing some reactions. We've had some very strong rejections from 1912 before. So let's just watch the price reaction there. If we get some strong exhaustion signals, we can take some higher risk sells and to the potential retest of 1905. And for anyone who wants more information about scalping concepts, who wants more information about like fundamentals, please go watch the videos on the YouTube channel. Go watch the previous live streams. Alright, so let's see these stream questions. How's it going, everybody? The mic volume is all fixed. Who is more affected by Brexit? UK, because the European Union has a bunch of different countries that are involved, of course, in the European Union, where it is going to be the UK who's going to have to change their trade ties with countries outside of the European Union. Yes, they might just go by WTO rules in an Australian style trade deal with the EU, but they still have to make significant trade deals with other countries across the world that they do import and export with. How are we looking on GJ? FTSE is up this morning. I talked about that. Do brokers and liquidity providers discontinue Forex trading ACs, which tend to earn profits on the continuous basis as they are after our money? What is trading ACs? Accounts? What do you mean Forex providers discontinue trading accounts? I've never seen that. Do I use standard TradingView or TradingView Pro? TradingView Pro. Like the video. Yeah, if you guys enjoy the stream, send it a like, subscribe. I love how you explain your stuff. No worries. Thanks for coming on Roger's stream. No problem. NASDAQ 100. My NASDAQ 100 analysis is the exact same as my US30, as they are both just US equities and have the same fundamental impacts and very similar technical structures as well. How often do I stream? Anytime, anywhere between 1 to 3 times a week. If you guys enjoy the streams, of course, I can do it more often. If it's useful to you guys and you guys enjoy the content. If you guys watch all the webinars on my YouTube channel and take notes, it will much better. It will help you understand this content through the live streams much better. Sorry, it's hard to talk and read the comments at the same time. Election comes soon, so when to buy? When to buy what? It appears when the metals and gold was in the middle of peaking, some heavyweight advisors urging to accumulate the complex went sideways / corrected. Fundamentals and technical indicators prevail. Well, with the gold, you have to understand on the higher time frame. Let's talk about this, okay? Gold on the higher time frame is extremely overextended. Okay, and has peaked new all-time highs. Let's just go on a different feed so I can draw on it. And I've talked about this many times before. See previously from the 2008 financial collapse, when we had a lot of economic uncertainty. Of course, safe haven precious metals like gold increased in value. So we had that heavy inflation of gold for an extended period of years, 2 all-time highs at that time around 1890, right? Then we had this higher time frame consolidation period, as 2 years after the financial collapse with Federal Reserve stimulus, economy started to rebound. So market fear was starting to dissipate, interest rates were starting to get increased again, where low interest rates keep gold bullish. Higher interest rates have more gold sellers in the market. So as interest rates started to increase and economy started to rebound, you had this massive correction, which still did not break higher time frame bullish structure. And then you had this consolidation phase until we had more uncertainty come in the markets. What was the uncertainty that caused gold to peak these all-time highs? Here, it was initially Trump's elections and Trump getting elected, and then US and China trade wars. Then we had global trade wars and potential world war with North Korea, Iran, a lot of war uncertainty. Then we had coronavirus, okay? And understand coronavirus had a double whammy gold bull impact. Okay, coronavirus and COVID-19. I think you're not allowed to say that word actually on YouTube streams, or they shut down your channel. That's what Rakeel was telling me. But anyways, the virus, the V. What are we gonna call this as a code word? The hoax. Anyways, the hoax virus, right? It led to a global lockdown, where this lockdown led to gold mines and production areas around the world being shut down. So gold is a physical precious metal that is traded. When these mines and gold facilities, gold production facilities were shut down, and we had this mass market fear, you had the gold supply and delivery being limited, and you had the demand for it very high, as well as market fear. So you had this one-sided volatility and heavy volume in gold buys. But as we have started to fade away, and after we hit new all-time highs, as we have started to fade away some of the coronavirus fears, and economies have started to open back up, and gold supply has become more balanced again, we can see we do have the potential for a repeat of history, and gold to do a deeper correction and potentially have a consolidation phase, where then it will depend on if we have continued COVID panic and have the liquidity for another move to the upside, or we will see something similar where we will get a massive pullback and correction and down to like the 1700s, and then possible upside. You get what I'm saying? So there were multiple reasons and circumstances with COVID that kept gold so bullish, and that's why we were taking advantage of and yeah, China and China and Russia were buying a shit ton of gold as well through that trade war period. But that is why when those production mines were shut down and coronavirus fears were strong, you're just looking for pullbacks and gold buys. It was the easiest thing to play in that situation. Okay, sir, can we trade based on COT data? COT data, the commitment of traders report data, is more relevant when you have normal market conditions, not these pandemic markets, and it's more just a higher time frame macro analysis of institutional order flow. You cannot trade just based on that one aspect of data. You have to use it alongside other technical and fundamental confirms, and that's more for like a swing or positional perspective of trading. So I pretty much answered that about gold. Say something about euro or GBP. We did. Is Forex a hellhole to learn? No, Forex isn't. It depends. Well, if you have a passion for financial markets and micro and macroeconomics, and you enjoy back testing the charts, then it's something you enjoy doing, and you will enjoy the learning process that comes along with it. Just like when somebody is trying to get involved in anything, whether it may be a sport or working out, or they want to be a professional chef, or they want to be a business owner, all of the hard work that leads to the success at the end of the day comes from behind the scenes, right? What do I think for US30? I answered that. Is this stream actually live? Like, yes, we are like live right now. Do you offer this live analysis each Sunday? No, not each Sunday. I just was doing it tonight because I was bored as well, and I just wanted to, of course, share some more information, keep myself busy, as trading does get lonely, you know? Audio is low. I think everybody said the audio is okay. How's ES looking? What is ES? Hello, why the name Capital Hungry? Because I was always hungry for capital. Why is it so easy to see past market structure? Gold was so easy now to see that I was gonna go bullish from March. No, if you have if you come I'm just saying we have been following, like if you watch these previous gold breakdowns, like this gold analysis, we were talking about it's going to go to 2000 plus before it hit 2075 2 months ago, right? Gold here, we were talking about it 4 months ago, the gold bulls. Like this is when gold was at 1600 and we were talking about it going up into and we were talking about it going up like all the way into the 2000s in these various gold webinars. That's why. Euro stock futures? Are you guys talking about Euro? Is ES stand for Euro stocks? Oh, the S&P E mini? No, I don't look at any of the minis. I just look at primarily US30 and US equities as a whole. But yeah, we talked about the US futures. My view on US30, aka Dow Jones, NASDAQ, S&P are all the same because they have the same fundamental impact and catalyst and very, very similar technical market structure, right? If you guys look at NASDAQ, Dow Jones, S&P, it is not that different on the technical structure. Yeah, gold, we were looking for the pullbacks to 1912 key level for potential sells here anyways. Like if you guys come to, this is the capital hungry analysis. This is what we're looking for. Gold didn't suddenly pump. It's just doing its pullback for the new week. It's a fresh week. It's very early into the new week. We're looking for a new weekly wick at 1912. If we reject there, we can take the sells down. But it really depends on the reactions at that price level and how London Open runs. And if we get continued rejections at 1912 higher time frame key level, and also the inverse confluence, if the US dollar continues bullish, we have that inverse confluence of gold turning bearish. With the various lockdowns, do you think gold will rise? If we have lockdowns that lead to gold mines and production facilities shutting down again, meaning limiting the supply of gold, then yes, gold, US dollar, Japanese yen, and Swiss franc will all continue bullish, just like when we had the first initial lockdowns. Not primarily, just because gold has been heavily overextended. Are the Brexit talks over, or will the Brexit talks have officially been ended from the UK perspective? Here you guys can see, if you guys can read this, this is a news briefing over the weekend. Gold, we are watching just on that hourly chart right there, but we're going to be zooming in on the 1 minute to observe price action the fastest and notice buyer and seller strength or exhaustion and other price action signals. Yeah, so Brexit talks ended over the weekend. You guys can see this quick news briefing on your screen. Yeah, so now that Brexit talks are over, we want to see how this gets digested by UK investors. Will this be taken as a good thing because, like you said, finally the Brexit talk is over, and then we can finally start to see some economic rebound and progression? Or will it be taken as a negative and potential more economic uncertainty, right? We are noticing on the 1 minute a lot of rejections at this exact same price point on the dime by buyers. So if during London Open, even if we get a pullback and fail to break above there and then come below 136.200, we can take the scalps below 136.200. I already shared my perspective on US30 Dow Jones, but for anybody, actually you guys aren't in the private chat. I was gonna say you can watch the market update Vimeo, but you guys don't have that. You guys are not in the private chat, so sorry about that. Never mind. So just to quickly review the scalp trade ideas. If we break above 1.72 in this minor bearish market structure and fail to break these 1 minute lows, safer scalps is above this point, with a lower time frame 1 minute break and retest. Otherwise, we're going to continue to play the lower time frame bearish market structure and take sales below 1.685 key level. GBPJPY, we are noticing a lot of exhaustion at this 136.4 price sensitivity area. If we get a pullback to this bullish market structure and a break above 136.5, then we will see continued upside to the quarter point 136.8, where we can take that 30 pip scalp up. Otherwise, the safer sells would be below 136.200, where of course we would be breaking minor lower time frame bullish market structure. We would be failing to break above this price sensitivity area, and the break and retest below 136.200. Yo, private Zoom chatters, tell these guys in the YouTube stream just to go watch the scalping videos also on the videos on the channel, and like the other, you know what I mean, so they get a better idea in their free time, in your free time. All I look for when I'm watching these equity charts is to see how global investors are moving stock markets across the globe, right? Because if you see equities are bearish across the scene and you're seeing sellers impulsive moves across global equities, you know that market fear is stronger around the whole world, so you can use this sentiment to your advantage. So I'm not looking for and I don't particularly trade any of these indexes. I do take Dow Jones trades and do Dow Jones analysis, which is of course sent for you, AJ, in the private chat. But as per UK, Germany, Australia, China, Japan, for example, I'm just looking at global investor sentiment. So US stimulus, if the US stimulus is approved, right? Are you talking about on AJ? Are you talking about on GJ? From an intraday perspective on GJ, we were looking for this anyways. Was if we break and retest above 136.5, the 50 pips up to 137 to test that bearish market structure, and then potentially better risk versus reward sells from that point. Higher time frame safer buys would be above 137.2, because then you're breaking above bearish structure. We would have if we have the Japanese yen bearish, and also if we have the Brexit no deal taken as optimistic and that break and retest above 137.2, then we can see safer higher time frame buys. But I want to initially get that pullback for the new week, watch the reactions from these key price points, and then see if we can start taking the sells down from there. Gold, solid reactions at 1912. Remember, it's only pre-London. We still have actual London open in 10 minutes, where we're going to get a reminder of that. Yes, these streams are always saved and uploaded to YouTube, so you can always replay them, learn from them, watch them again, take your notes. I'm just going to quickly go to the washroom for about 5 to 10 minutes as we wait for the London Open. The one thing, if you guys can tell me how I can make it so you guys can scroll on the YouTube live actively back and forth. I don't know how you guys can do that, or is that can you guys do that? For gold, do you have for gold, will price go bullish if the US stimulus deal is approved and gold mines are not affected by the lockdowns? Yes, there still is the potential for intraday US dollar bulls, because that stimulus deal can for gold bulls, because that stimulus deal can weaken the US dollar, sorry. So if the US stimulus is approved, then we of course we have that potential for more North American market optimism, and that will increase the value of US equities and US stock market and decrease the value of US dollar, which that inverse correlation of a weaker US dollar can also support gold buys. So we'll have to see how that goes accordingly. Yeah, right. On Rakil's stream, I can do that as well. I can rewind it as the live stream is playing. So I don't. I think it's a stream I have to. I mean, sorry, a setting I have to set up. So sorry about that. It would have been good if you could replay and or go rewind it. So then I don't have to keep repeating the different analysis, you know. But it's all good. I do not have Instagram. I have the Twitter and the Telegram. Please tell me about a price action course I have. I don't have any courses. I have a private channel that where we do analysis, live session webinars, weekly recaps and stuff like that every single week. You know what I mean? We have like our mental reminders, news reminder alerts, etc., etc., and they have access to like 40 plus educational webinars, which is the CH webinar vault. What is this? What is it? Right? So as a Capital Hungry private member, if you sign up for the private chat for the monthly period, you get access to all these technical and fundamental webinars, where I just posted a video about how it works on my YouTube channel, right? But if you do not want to pay, because you don't have to pay, right? You can watch all these different webinars for free. There's a bunch of different price action sessions, scalping sessions, where we talk about lower time frame price action, market structure, and all of that stuff. Oh, it's the enabled DVR. That's what it was. It's too late now. Let me see if I can still. Yes, I can. I might be able to. No, I can't. I can't change it now. I have to restart the stream. Next time. Thank you, TA Global. I appreciate that. Next time I will do that. That's what it was. I saw that option too. I didn't know what it meant. I don't stream too often. This is like only my third stream ever, you know? But yeah, so if you guys want to learn more about the different things I'm talking about in the stream, go watch all the videos on my YouTube. If you want different news headlines, an example of that as well for free. The Capital Hungry private members, they get access to the newsroom, but there's also these headlines that are posted on occasion and different other analysis on my Capital Hungry Twitter as well. The free Telegram chat, the YouTube chat, the YouTube you guys already know, of course, right? So, and then the Twitter, there's a lot of information between all that. There's a lot of information between the Twitter, the Capital Hungry free Telegram, the YouTube channel, these live streams, that like it's more than any paid mentor is going to teach you, and like I would put money on that on this live stream. I'm personally not trading today. I am just more doing analysis, back testing the charts, and observing price action. My trading rules that I actively trade on Tuesdays, Wednesday, and Thursday pre-London hours till around New York Open, just because I want to have as much control in my trading as possible, and I want to have and I want to be able to plan as much as possible. The stimulus news is not a pre-planned event. It is talks between the various U.S. political parties, and it depends if Trump wants to go forward and they come to an agreement, right? These talks have been going on for a period of weeks now, and also over the weekend, which was like I just showed you when I showed you guys this news briefing. Nancy Pelosi was still optimistic about a coronavirus relief deal, but we have to see how that goes. For the third stream though, how's the YouTube how's that overlay look? Like the breaking news section on the left, the little banners, you know what I mean? That little like, subscribe button. I made that shit myself, you know? Oh shit. Oh yeah, I gotta go to the washroom, alright? I talk too much. I know the one thing that's different about me and Monty and Rakil guy. I know Monty and Rakil guys very well. We're all friends, but I talk way more than them. You know what I mean? So I need more nutrients, need more hydration and food actively. So I'm just gonna go to the washroom and grab some food. Right now, because I'm in Canada, I have a compound account that I'm slowly been grinding out with Vantage FX, but primarily I keep a set amount of capital in the account. So you can't see the name of the thing. Oh, so it's okay. I'll tell you what it is anyways. But anyways, I keep a set amount of capital in account, and I just scalp or intraday trade when I'm doing these sessions, or based on the trade ideas I send my private channel, about anywhere from $5,000 to $10,000 a month. But I started from penny lots, right? I started from penny lots, but now after every 30-day period, I can make that amount. But that was on 1 to 500 leverage with Vantage FX, the same broker that Raja uses. I used to have like 20,000 followers on my IG. I always used to like post the trades and everything on there. But Vantage FX is now no longer gonna be serving Canadian clients. You know what I mean? They're gonna no longer be supporting Canadian clients. So the only regulated brokers for Ontario clients is like 1 to 50 leverage with Owanda. You guys probably all know Owanda. So I'm gonna have a big change in my trade, even Trader's Domain. I have to do the whole crypto thing then, right? So I have to do a big change in my trading, because for the last 3 years I've been trading from, oh yeah, GJ's breaking above 0.500. This is good. We're gonna get that buy. We'll get that pullback, and then we'll get that pullback and buys above 0.500. So for the last 3 years, I've been trading with a 1 to 500 leverage, right? So now it's gonna be an adjustment to get used to that. Okay, so GJ is still respecting this lower time frame bullish structure, as it also broke above this bearish structure, which we connected from these peak points here and just dragged across, right? We are seeing a potential hourly close above key level 136.5. If we could get a pullback at London to retest the structure and come back above key level, we could run those buys up to 0.800, all right? Only safe sells below 136.2. Otherwise, we're taking that. This is the one I only use when we're on the lower time frame. It's the 1 minute chart. I think the most viewers we got in the live streams was 100. So if we can get 120, 150 viewers on this live stream, that's good. So we have London open right now. I just want to zoom out quickly back to the hourly time frame and see how this hourly candle is setting up. This hourly candle, oh man, that was quick, because this hourly candle already made its lower wick and retested 136.5, so it might just run the buys up right now for a potential scalp. It already did a pretty clean retest of 136.5. It's gonna go to 0.800. It looks like. I'm just gonna wait for some further price action to develop. For anybody that streams on the for anybody that watches the other streams, this is like their take profit. 10 pips is done. Yeah, Andre, my weekend was pretty good. Okay, gold as well. So gold, this is nice that gold closed below 1912. I would like a 1 minute retest of these highs, but it does look like we if we have the US dollar strength run through, because this US dollar open candle, London open candle, has yet to create a top wick, so it might just be grabbing liquidity then turn bullish, which would support gold sells as well. I would only take gold buys at a break and retest above 1912. Otherwise, I'm more in a sell bias. So we'll start watching that on the lower time frame. You got that entry at the 0.500 retest there quickly. Essie. Yeah, this is what we were expecting. See, I told you it's going to 0.800. As that lower time frame structure is more bullish, and this is what we were expecting as well, right? If we got the break above 136.5 to start making its ways up and retest that bearish structure. If you got that retest quickly, you already got your 20 pip scalp. Good job. Oh, Andre, you entered at 146.45. That's a good scalp for you as well. Yeah, you can see the price action and market structure on the lower time frame was clean with the respect to bullish structure. Breaking above 136.200 psychological price level. Retest of the bearish market structure. The break and retest of the bearish market structure. That minor break and retest above 136.5 key level on the 1 minute. And then it's going to go to 0.800 there. Jesse, you got entries. Let me pull up the chat here so I can see. Did you guys ask anything? The sound is good in the Zoom. World markets are mostly green. Equities are looking more solid. You were in long since 136.2. That's a great trade. 136.4, great trade. Did the market update webinar help that we were expecting that bigger GJ pullback for the new weekly candle? Did that help you guys at all or not? Let me delete these. TP2 smash, you're out. Solid play, guys. Good job. Good scalp. Yeah, it would be. We're reacting around 0.800 area where we expected. 0.800 right here. That's 0.800. That retest was extremely fast, but remember, when you are looking at the 1 minute and you're scalping, these moves are fairly quick and impulsive, and you can get your scalp TP hit quick, but don't get FOMO that you missed the move, especially when it's only 4 minutes into London Open, right? So let's just wait, because it would be ideal to get the 30-minute candle to have a nice close at around 136.8, and what we can identify is that we've broken above these previous 1 minute highs, right, where we were getting a lot of struggle. We've broken above key level 136.5. I'm gonna extend this bullish market structure out, and we are going to continue to play this structure now throughout the rest of London and throughout New York session. Okay, you lost 5k right now? How, bro? It's only 20 pips. Oh, in 4 weeks. Oh, okay. I was like, like, damn. Sorry, I'm not laughing at your pain, because like I've lost thousands of dollars in the market when I first started. How long did you just get into the game? So what would be ideal now is if we react to 136.8. For anybody who got those entries, secure and leave a runner, because if we get a pullback for the 30-minute to retest these previous 1 minute highs and this bullish market structure, we can take some more buy scalps, you know. Otherwise, we're waiting for a break and retest above 137.8 psychological price level. I gotta give, right, 3 to 4 weeks. Oh, you just started 3 to 4 weeks ago trading Forex for the first time, Brendan? Bro, then yeah, that's normal, man. You're supposed to lose when you start. You gotta give your dues. All right, Euro USD, also watch it because as of now, the dollar is looking a bit more bearish and we do have equities holding strength. So we might also get our EU scalp for about 20 pips if we break and retest above 1.723. Okay, so keep an eye on that. UCAD, we have no confirms to buy, but if we have that continued US dollar exhaustion, we're going to take those sells below 31600. Dow Jones, I do not want to enter buys at this high point unless we break previous intraday highs. Gold looks like it's going to give that exhaustion. Yeah, this is not gambling. If you have fundamental and technical market knowledge, right? And then you also have you also develop the experience and refine your skill set. Then you plan your trades using technical and fundamental analysis and creating confirms for yourself. Remember, for GJ, we said if we continue to hold this bullish structure, if we break above these 1 minute highs, if we have an optimistic start to the week, we will see that squeeze from 136.5 to where? That quarter point at 136.8. All of the gulag people, all the gulag chat people, or the people who are not seeing this right now live are going to watch it later and wonder how the fuck we figured that out, okay? It is just using technical and fundamental confirms, looking at market sentiment, looking at how positive or headline negatives are getting digested, and using that information for trade ideas while putting probability in your favor. The issue that people have is not the technicals or the fundamentals. That is all learning. Any human can learn anything. We are not dumb. We all have functional brains. You can put the time and effort into learning. The issue people have is their trading psychology. Yo, see my tip when I told you guys to secure some positions and leave runners? Man, look at that reaction at that quarter point. I'm giving you guys straight fire. Appreciate this. Let's watch how it continues to react. It would be ideal to get another retest of 0.500, but and if gold breaks above these 1 minute low reaction area here at 1908, we'll see that squeeze down to retest this bullish structure and possibly 1902. But it depends on the US dollar still. Let's see if the US dollar, how it runs through this Euro session. I still didn't go to the washroom. Now continued buys, of course, would be a retest above 136.8 or a retest of structure. A break and retest above 136.8 or a retest of structure and price above 136.5. Yeah, the 1 minute time frame is an eye opener because you can really refine. Okay, you don't watch the 1 minute time frame all the time. Then you're just gonna get a headache. You first do analysis on a pair, determine key levels in areas of interest, price areas of interest based on historical points, market structure points, whether it be a trend line retest or whatever it may be, higher time frame candle bodies, whatever it may be, right? And then you watch the 1 minute price reactions and price action at those price points. You can get much better and more refined entries. You can have less drawdown. You could see the reactions and price action a lot faster than instead of waiting for like a 15, 30 minute or hourly candle close. You get what I'm saying? Yes, sir. Okay, Kramer, what's your question? Question, my entry at break and retest of gold at 11 a.m. 1810. Here? Here? honestly, that's just gold. Because you have to look at, yes, this is the key level, right? But you have to look at where the 1 minute kept reacting and where buyers were reacting. So you can see at this point in time, gold was particularly trending bearish, right? The lower time frame was trending bearish. It was playing through the key levels. Buyers, after creating this low, did break a bit above the key level and create these 1 minute highs where we see buyers react there again. Okay, yes, we had a clean break and retest where you could get that entry at 1902 at that time, and you were up at least 10 pips. But if we did not break above those previous 1 minute highs, you had no validation to extend those buys, pretty much, which we saw many times happen. 1912 rejection again. It broke a bit above, but did not break that exact same price point. Broke a bit above, did not break that exact same price point. Look at this. When it finally did break above and have enough order flow, look where it created the order block. Above that exact same price point or area on the 1 minute. Okay? So yes, it can be annoying, but you have to follow and see the reactions of buyers and sellers at the exact price points in the lower time frame, because if you had the buys above 1912 or 1902 and you're up 10 pips because you entered at 1902, you cannot extend your trade unless buyers break above these 1 minute highs. The only time you could extend that trade is if you took 1902 buys here, and then we finally had that break and retest above those highs. You understand? So yes, we have these key levels that we can use as guides, these higher time frame key levels, but you have to look at the real-time price action and where buyers and sellers are reacting. You understand what I'm saying? Very similar to how these lows were created around 1897 key level, but not exactly on the dot. They're pretty much just in this price range of where sellers are reacting at those lows. Okay? So these buys were too early in the sense, okay, so these buys were not too early. They were good buys at the break and retest of 1912. You just did not have validation to extend them unless we broke those 1 minute highs and had that further liquidity for those buys. You could see we had this consolidation phase where order flow was being generated, and we did not have enough order flow and buyer liquidity to break those 1 minute highs until we got to this price point, right? So now let's let GJ do its pullback. Let's see how this 15-minute and the 30-minute candle closes. Continue to watch the headlines to the left here. Euro USD, we rejected exactly at the lower time frame highlighted bearish market structure. Our safe buys are only above a break of bearish structure, US dollar weakness, and above these 1 minute highs at 1.72, this order block to the left. Then we could take that scalp squeeze to the upside. USDCAD did not break above structure. We're waiting to see if we have continued US dollar weakness to take scalps below 1.316. US dollar did grab liquidity and test these previous intraday lows, but it still has yet to create an upper wick. I really want to see how this 30-minute and hourly candle on the dollar closes. Markets are looking much more optimistic to start the week when we're looking at Dow Jones, UK, German DAX. And we'll just keep it on GJ for now. Or if we get the break and retest, of course. Only sells would be below this order block area. I really got to go to the washroom. All right. Sorry, I had to go to the washroom, otherwise I would have shit my pants. So gold did not break these 1 minute candle body price sensitivity area yet. That would be better confirms of sells down to 1905, retest of that potential bullish lower time frame structure. US dollar still fairly bearish. Japanese yen fairly flat. Euro and US and UK equities looking more solid. EU still might give us our scalp confirms above 1.72. GJ just did a minor pullback. If it breaks above these previous 1 minute highs and retests above 136.800, we could take that 20 pip squeeze to 137. No significant headlines in the past 10 or 15 minutes. The no deal Brexit going along with the Australian trade ideas isn't being taken as negative either. We haven't seen like, for example, those negative headlines over the weekend about the no deal Brexit did not lead to a real significant market gap over the weekend. Usually the market gaps are created by institutional activity or any fundamental catalysts that take place over the weekend that us retail traders cannot see that order flow. And there was not a significant gap, which was good to note. And through London session so far, we haven't really seen any bearish price action as well. So if anybody's who's still holding your runners, you're still good to go. So let's just see if we can scale in if at a break and retest of 0.800 now to 137. Gold, we're not taking buys unless we break above, break and retest 1912 key level. We could still get a rejection at that point, but we're watching US dollar strength. US dollar is bearish right now. If the US dollar breaks 93.6, these previous intraday lows, and this bullish intraday structure, that is showing us stronger market optimism, which then I can see the buys at a break and retest above 1912. We can start taking some scalp buys up on gold. Just because we have had some very strong bullish candle closes, but you can see at this higher time frame key level, we've seen buyers react here very well before. So if we have that US dollar, if we have the US dollar break the structure in previous lows, then that would make more sense. See how that US dollar weakness we're observing in real time is also helping EU potentially break this lower time frame bullish bearish structure, and we might get our EU squeeze as well. Sorry, let me read the YouTube stream and answer the questions. 1 second here. And of course, you guys will be able to rewatch the stream, see all the intraday analysis and everything, and what we called ahead of time too. A lot of the capital hungry private chat members got in earlier because we already did our GJ analysis at like Asian session at 8 p.m. And if we had GJ break above 136.5 or fail to break 136, that pullback to retest this intraday bear structure made more sense. And then long-term safer buys, of course. This was also shared during the stream as well for intraday analysis. Okay, let's see these questions. Possible re-entry on GJ. Yeah, we didn't get the support created, but we do have this 30-minute candle closing fairly bullish, closing above 0.500 and around 0.800 psychological price level and quarter point area. So we might get that retest for the new 30-minute or just a support created at 0.800 to take scalp buys up. spend a few months educating yourself first. Man, spend a few years educating yourself first. But yes, that is good advice, Racer. Sorry, I didn't start from the top. Gold was more bearish on the higher time frame. Yes, sir, Ronaldo, I agree with you. It has that potential for exhaustion. We're looking at like the monthly chart. It already peaked all-time highs with that COVID fear. If you guys have questions about the history of GJ, if you guys have questions about scalping, if you guys have questions about trading psychology, discipline, market structure, analysis, if you have questions about any of these, all you have to do is click the Capital Hungry YouTube channel, and then some of these YouTube videos have shittier audio because I used to have a shitty mic, and like I was never a mentor. I'm not a mentor. I'm just a trader who has put a lot of time and effort into studying the fundamentals and back testing the technicals and sharing my trading progress from like penny lots forward. And like even Rakil will tell you all that stuff. Like put in a lot of time and effort into that, where people really appreciated and enjoyed the analysis because they can make money off it. So then that led into creating the Capital Hungry service. So some of these older videos before that have shitty audio, but they're still all extremely useful in different fundamental and technical topics, from the greatest transfer of wealth, gold, oil, central banking, ton of stuff. This one has like Rakil in it, Wicks Don't Lie, the Chart High podcast, Evolution of a Trader. My IG got permanently deleted. I temporarily deactivated it to take a break off social media, and then it got permanently deleted because after I temporarily deactivated it, they flagged my account for political propaganda or some shit, because I posted a lot of stuff about how central banks are corrupt, how governments are corrupt. Even when you are trading from pre-London to New York Open, that is 6 hours plus of trading. Nope, that is 6 hours of watching the markets, looking for pre-planned trade ideas. And usually in that time, I am looking for 1 or 2 trade setups, right? That's why, even though I'm sharing this information and potential trade ideas now, these are not a part of my active trading days. Because like you said, wealth mindset, that is quite a long period of time to be staring at the charts. But it's also quite an inefficient time because London, pre-London hours to New York is quite a good, pretty solid trading hours. You have good volumes, you have good volatility, you can have different political tensions going on, you can have your trades play into New York session as well, like leave runners. But that's why I only trade those 3 days, Tuesday, Wednesday, and Thursday. Because for those 4 to 6 hours of looking for the intraday trade setups that are already pre-planned, if the confirms come, I can have focus for those 4 to 6 hours from pre-London to New York. Because it's not like I'm actively exhausting my energy staring at the charts in trades. The amount of stress and energy used while you're in a trade or while you're just doing analysis is 2 different things. When you are actively in a trade and you have put your money into the markets for a risk, for a potential reward, that's what it is essentially. You're putting your money into the markets based on some analysis that put probability in your favors, or so you think so, based on your experience and knowledge, for a potential reward that should be at least double, triple, 4 times the risk you put in the market. If you really want to go for like 1 to 3 risk versus reward trades minimum, right? It's not really too appealing to go for 1 to 1 or even 1 to 2 trades because you can get so much more out of the market. But anyways, when you are actively in a trade and you have your emotions involved, your money on the line, you are using a lot of mental energy and stressing and thinking about the position and staring at the chart and watching it move and doubting your analysis. All these different things are going on, right? Compared to when you have already pre-planned a trade, done analysis, and then you're just waiting for the setup to come to you. So that's why it's not that bad, right? I only take around 1 or 2 trades during that time period. I still keep a 3-strike rule during those trading days. Yeah, trading's a lonely, Damien. Trading is a lonely thing. You do not need a team, but a community can help. I announced my washroom breaks 1 hour before. Yes, sir. Yes, sir. What is an order block? An order block is an area of consolidation you can identify across multiple time frames where you can see potential continuation from trend or rejection from this point, and especially if it lines up with a higher time frame or historical price point of interest. So for example, like on gold, you can see we had a heavy extension of buys, but at this price area of interest, which happens to be a retest of bearish structure and our higher time frame key levels, you can start to see exhaustion on the lower time frame. This would be an order block building in this area where what you have happen is with the US dollar strength and failure to break above this level, buyers close their orders and sellers jump into the market, and then you have the seller's impulsive move. At the end of the day, the market is just buyers versus sellers, and you just want to be watching buyers versus sellers strength as refined and as fast as you can when you are looking to execute, when you are using the lower time frame. But I'm always watching the lower time frames in the 1 minute alongside these key levels in market structure and areas of interest that are already predetermined. So EU failed to reject, failed to break above this bearish market structure again. GJ looks like for this new 30, we could possibly just be creating a support at 0.800 and then have that squeeze up to 137. It's looking like it's creating potential flat candle body support there. We also still have 2 hours till Asian close, so we will get another scalp. This first scalp, for anybody who caught it, that 30 pips up was beautiful, very fast as well. UCAD is fairly mixed. EU, no clean setup as we did not get those confirms yet. US dollar failed to break these lows for now and failed to break the bullish market structure, so it's still fairly mixed as per the sentiment. Headlines, nothing too crazy. China Foreign Ministry on reports that China warns the US it may detain Americans over prosecutions. The US side is calling white black and trying to play the victim. So some minor US-China tensions. But other than that, I was expecting a lot more Brexit headlines, but nothing so far, and not too many headlines from like Euro speakers or anything. Oh, right here we do actually. ECB says European countries are being hit by second wave of COVID. Doesn't look like countries want to expose strict lockdowns. This headline was probably one of the reasons that EU failed to break that bearish market structure, because it was sent like 3 minutes ago. Right? It looked like EU was showing more potential for buyers to break above the structure and then continue its move up above this price sensitivity area to the left, and then break and retest to give us that squeeze. But we had an ECB speaker exactly like 3 minutes ago talk about how a lot of EU countries are being hit by the second wave of COVID. So it does bring a little bit of uncertainty as you have a Euro Central Bank speaker saying that. And we do have the dollar still holding that structure point and not breaking below it yet, right? So this could have just been a bigger liquidity grab by the dollar and just this creating its weekly lower wick to potentially continue up. But let's see how this hourly candle closes as well within the next around 23 minutes or so. Equities are still looking fairly bullish. Global equities, USA, UK. Nothing crazy though. Watching price action here, we can see some reactions at these previous highs. We still would only take safe buys if the dollar continues bearish and we break and retest above 1912. Like if we see this piece of price action, that break, that retest, lower time frame support made, we can easily take gold scalps to the upside. If the dollar does turn bearish and breaks the structure, we have that confirmation of that inverse correlation between the US dollar and gold. Oh, sorry, I didn't see these. When am I releasing the new educational webinar? I didn't even record that yet. I still have that right here. Changing the way we view and talk about the markets. So I will record that educational webinar tomorrow afternoon. I'll send you guys in the private chat a link to that. It's like a mix of a technical, psychology, and fundamental webinar, and just changing the way we view and talk about the markets. You know, step-by-step guide on how you manage your GJ trade, Andre. Let's take a look. Okay, beautiful. 1 minute, 5 minute price action. Okay, so of course you you highlighted that lower time frame bullish market structure. Buyers were respecting this bullish market structure. Even with some of the negative Brexit headlines, we still did not get that break below this bullish market structure. We broke above those previous 1 minute highs, which you highlighted. Candle closed above the resistance. You took your entry here. Stop loss below these structural points. 136.5 is also a psychological price level and key level. Extended the trade up. Target was 0.800. Beautiful, beautiful trade. Solid scalp. 30 pips. 20 to 30 pips within minutes, you know? And again, for gold, if the US dollar does pick up strength, as we can see, buyers rejecting this previous 1 minute high here. If we break below these 1 minute lows, like I was saying, we can take that 40 pips down to retest this bullish market structure on the 1 minute. And possibly come down to 1902 if we break and retest below there too. Because our original intraday analysis on gold is this, right? We were just looking for a pullback through Asian and pre-London up to 1912, which we got that 100 pip upside move. And then we were looking for US dollar strength to come into play, a rejection at these previous price sensitivity areas where we saw buyers reject last week, which is also our higher time frame key level 1912, and then start to take sells, where safer sells would of course be a break of intraday bearish structure, bullish structure, sorry. Dollar, okay, looks like that 30-minute candle is just grabbing liquidity, but let's see. EU, is it finally have, so what we can see on EU as well, just when we're observing the 1 minute price action, is yes, it failed to break above this bearish market structure that we just identified on the lower time frame here, connecting these wick points down, right? And we can see how buyers and sellers are reacting to this point, but sellers also failed to break these previous 1 minute lows. So now if that was enough liquidity and we break above these 1 minute highs, we could have a potential shift into lower time frame bullish structure and then get that squeeze. We need to see that buyer strength in that lower time frame bullish price action to have a clean break above this bear structure and clear out these 1 minute highs to show that this was just liquidity being generated for an impulsive move to the upside. And then especially if the dollar now breaks this bearish structure, goes bearish and breaks this bullish structure, right? So that would be ideal. GJ looks like it is still creating that support around 0.800. 15-minute candle about to close in 3 minutes. This is a bit wishy-washy right now. It is a bit, but as long as we remain above 0.800, we should get that extension up. Gold's just messing about. UCAD, we're still waiting for price just to retest bear structure for better sells or come below 1.316. US dollar is turning bearish. 30-minute candle breaking the low of the previous candle, but showing that market optimism. Sterling extend gains, rises 0.5% to session highs. All right. Yeah, see, he was looking a bit wishy-washy in that new 15-minute candle. So we might get that deeper pullback first for the new hourly candle to like 136.5. EU though. Okay. We just need a clean break above this price sensitivity area. We can see buyers reacted to a bunch of times. So once we break that, we'll retest it and we'll take that 20 to 30 pip squeeze to the upside. GJ just playing around 0.800. No clean break below yet. Still looking good. Alright, sorry, I didn't read the rest of the YouTube chat. The capital hungry gulag, we're gonna call it. What does everybody say? We need likes and subscribers. Day traders are people who do trades a day, right? Yes. It's in the name. Up 30 pips on GJ. Good job. Up 30 pips on 2 buy stops, 34 pips on GJ. Just cost 17 pips on GU. When will I open my IG again? Can you go through some confirmations? You can watch those. You can watch the scalping webinars on the YouTube channel. Block tab hacks? What the hell is this? What the hell is tab hacks? Damon, yeah, it's all explained in those, like, there's like it's a 4-part series. You've watched it all. It's like 8 hours long total if you watched it all. Plus the previous price action sessions. Trading guide, no problem. Glad to have you here. Oh, we got 200 live viewers. Wow, that's a record. US stimulus equal more dollar printing equal gold price increase. Very true, and it also equals weak US dollar because that excess printing. Oh shit! I didn't even look at the. I didn't even see this. Reacting to 1912, almost on the dot here in the lower time frame. I guess because dollar is going bearish. And we did say if dollar breaks below 93.6 and we have some market optimism because equities are looking more bullish for Europe side and UK side and North American futures, of course. But look at the reactions around the key levels, you know? It's a beautiful thing. It's a beautiful thing to watch. Bizzletree, how's it going? It was good information. I think it was too much information for that gulag chat. Saf, it would be, if you want to learn about fundamentals and you want to put the time and effort in, Capital Hungry private channel can teach you a lot. But I just ask that people have basic knowledge of trading overall, like understanding. Like trading is a game of risk management, probabilities, have some basics, you know, you know what a pip is at least. At least you can have gone through baby pips or some basics. Kerwin's in here? Where's Kerwin at? No, I'm not here most days. Sorry, sadly not. I'll probably be streaming once or twice a week, London or through New York session, whatever I'm trading or watching. Yeah, it's cool too, eh? Nobody else got the breaking news headlines. Look at that shit. Look at that shit on the left side of your screen. Fancy. Yo, that was a beautiful reaction at 1912. Like this preset analysis is following pretty good. Look at the up arrow to 1912, rejection on the dot so far, but we need more confirms of rejection here at this point. And like we said, if we do get that rejection and we break below these 1 minute price sensitivity area around 1908, we can see sellers jump into the market, correct some of this upside move, and at least retest this bullish lower time frame market structure. And that's like a 40 pip squeeze down to like 1904. If it breaks below that structure point, then we can go to the 1902 key level. Let's just wait for GJ, the new hourly candle, to grab some liquidity. Oh, let me clean this up. GJ, if you guys rewatch this, the buy squeeze from 136.5 from 136.5 to 136.8. That played out very well. Do I usually sell trade? Do I usually trade on Sunday nights? I am not trading. I trade Tuesday nights, Wednesday nights, and Thursday pre-London to New York. I was just doing the stream because, like, you know what I mean? You get bored, you get lonely. You get lonely while you're watching price action. I'm just, we've already, in Capital Hungry, we've already done the private chat. We've already done, like I already did a 40-minute webinar of the trade ideas we're looking for on gold, GJ, Euro USD, USDCAD, and US30 for the week. And I am letting price action develop more, and then I'll be trading Tuesday, Wednesday, and Thursday. No, I don't have a one trade a day rule. I just trade so I don't I know a lot of people come from Wickstone live stream, and Rakeel, because the profit targets are different as per the pip ranges. Like Rakeel really goes for like a 10-20 pip range, which is perfectly fine. He's really good at doing that. But when I trade, I'm more looking at intraday trade styles and intraday trade ideas. For example, if I was looking to take higher risk sells at 1912, and I took those sells from an intraday perspective because I'm following my analysis here of pullback to 1912 and then main bias sells, if we get that US dollar strength, my take profit is 1902 and my stop loss is like 20 pips around 1914. That stop loss is not a scalper stop loss. I'm playing more intraday trades, and my trade, it might get paid out if the analysis goes well. It might get paid out within a minute because there could be high volume and volatility, or we could see gold range through all of London and get played out through hours, right? I trade more intraday trade style, and I take those trades about and I look for those trades, only Tuesday, Wednesday, and Thursday, and I'm only looking to be in a trade for maybe a full day period, right? If my take profit of maybe 60 to 100 pips isn't getting hit within 24 hours of price action, then I'm probably just gonna exit that trade, or if I get taken out or whatever it means, you know. Yeah, if you are a new trader, let's just think and this isn't knocking the streams where they catch 10 pips, okay? Because it's all just dependent on your personality, your finances, what works best for you, okay? What Rakil does is extremely efficient for him because he has a good amount of capital to work with, and he has developed the experience and skill set for what he looks for and what he does repetitively over an extended period of years. And that trading style needs extreme discipline to keep losses small and not overtrade. The market targets human errors and human inefficiencies. It's like a casino. It's extremely easy to fall into the trap while you're scalping small pip ranges to overtrade, over leverage, rush yourself, be very impulsive, not think logically. It's just human nature that it's easier to fall in that trap. That is not knocking scalping. That is not saying scalping isn't profitable, but that is just the reality of it. And also, the risk versus reward is usually a 1-to-1 or 1-to-2 risk versus reward, where you might be sacrificing 10 pips to make 10 pips unless you close early like Raja does to of course minimize your losses. But 99% of people don't close early. They actually do the opposite. They move their stop losses. They remove it. They add in another position. They over leverage more or over trade more. You get what I'm saying? So with me, I take less trades. I'll maybe only take 3 trades a week, but I'm looking for a risk versus reward of 1-to-4, where I might sacrifice a 20 pip stop loss to take an 80 pip take profit, right? This allows room for error. This allows you to have a win rate of around 40, 50, 60% and still be profitable if you have the mental discipline and psychology to stick to that risk versus reward ratio and risk management. Because even if you have a 50% win rate, it doesn't matter, right? If you win 5 out of 10 trades, you are still profitable because your winning trades are 4 times, 5 times, 6 times greater than your losses, because you're going for 1-to-4, 1-to-5, 1-to-6 risk versus rewards. And on pairs like EURUSD, which are extremely liquid, on pairs like GJ, on pairs like gold, you see 100 pip moves every single day. Even if the market's ranging, you see a slow 100 pip move take place, right? It's not like these moves do not happen. So if you're already doing the higher time frame analysis, if you're already doing your intraday analysis and mapping these trade ideas, and you get all these confirms fundamentally and technically, you understand some of the investor behavior, investor sentiment, you understand the market structure, the buyers versus seller strength, why not go for these higher risk versus reward trades that will pay you more, but it also requires more patience to hold it, right? One of the things about scalping is that it's easily marketed to the masses. 1 second, you just got a question. EU. Okay, EU. US dollars breaking this structure, about to break these lows. EU gonna give us our buy squeeze up with this quick little break and retest. Let's watch EU. But anyways, you guys watch that because I'm not trading. But one of the things about scalping is it's marketed to the masses and to the 99% because it's extremely convenient, it's fast, it's impulsive, it gives you a quick dopamine rush. It really targets human inefficiencies, just like a casino, just like fast food, just like drugs, alcohol, all this other shit that I'm not saying you shouldn't do, but they all have a 100% proven negative impact on your mental and physical health, do they not? Right? So same thing in trading. These things that are convenient, are easy, are comfortable, are safe to you, and are like easy to do, like over trade, over leverage, follow signals, try to trade strategies all the time, they only lead to financial failure. right? Because human errors and inefficiencies are targeted in all aspects of our life, from the food industry with how we're targeted with all these chemical filled and sugar filled and like just unhealthy foods, from the media and social media, how we're just fed all this bullshit and just fed all these lies and nonsense and just constantly being advertised for information, or our data taken for information, and we are constantly just being sold advertisements, and we are just products, right? To the financial markets. It's all the same in every industry. So that means if you really want long-term success in this industry that can be extremely lucrative, you have to change preset bad behavioral patterns that you already have. And that is extremely difficult to do. That takes a lot of repetition, planning, knowledge, refinement of your skill set. You know what I'm saying? But yeah, I have a webinar on I have a lot of webinars on the free YouTube here. The psychology one on normalizing losses in trading is a major, major, major key. If you guys are having mental, or if you guys are having emotional issues while you are trading, please go watch this webinar. Okay, if any of you are having emotional issues, mental issues while trading, facing difficulties with your psychology, please go watch this webinar. Watch. It'll change your opinion. Okay? Bet in the chat, you guys gonna watch this one or what? Remember, this is all free stuff. You guys have probably all paid hundreds of dollars, thousands of dollars for some courses when you first got into trading and you didn't learn shit. At least go use these free resources while you can. And you know what I mean? But this is a great psychology one. And some of these chart high episodes, like the evolution of a trader, this is with Wickstone. This is with Raja. He did this with me. This is like 42 minutes of just me and him talking about the evolution of a trader. Right? And if you guys want more, if you want to dive into these, like we be ranting about this stuff in Capital Hungry streams all the time. This is the stuff we talk about. And if you want more, then of course, when you sign up for Capital Hungry private chat, if you do, that's when you get access to all these webinars that I don't have posted on my YouTube. These are for the Capital Hungry private gang. This is the Capital Hungry webinar vault. These are educational. These are not like breakdowns or like live sessions. These are just straight educational webinars on different fundamental and technical topics, from like market sentiment, data reports, market structure, everything. Pricing in, historical analysis, market seasonality, a bunch of different psychology webinars, everything. No, I don't really see a point for making IG. I might, because people want me to, but I don't see too much of a point for it. Yeah, EU, let's just see. Let's wait for this new hour, because we are getting some minor bullish market structure developing where we could get a deeper retest here. But oh wait, it is the new hour, 4 o'clock. Actually, we already had the lower wick created on this new hour as well. So we might just continue up from this point. If we break above these 1 minute highs in this wick, that'd be nice. Keep an eye on EU. Dollar for the new hour is looking fairly bearish though. This is just TradingView. The broker I use right now is Vantage FX, but after November 31st, they are no longer servicing Canadian clients. So then I'll be using Oanda. GJ for the new hour, safer buys. Okay, this hourly candle, the 4 a.m. candle just opened and it has no lower wick yet. So meaning if we don't break these previous 1 minute highs right off the bat, we could get that lower wick made and that potential retest of 136.5 and then continued buys up. So just be cautious that this new 4 a.m. candle does not have a lower wick. IC Markets doesn't support Canadian clients. They pulled out like 2 years ago supporting Canadian clients. IC Markets was the best. I never got to use it because when I first started trading in 2017, late 2017, they were already out of Canada. But my friend had it, and I saw like the spreads and everything back then, and it was crazy. Yeah, that's not bad, eh? For the third stream, I think we hit 200 viewers at one point. I'll do these more often if you guys like them. Trader's Domain is more, I think, because it's more crypto based. I don't really want to do that. I'm from Ontario, Toronto, Ontario. Better entries, right, A-Rod? For sure. I'll check those brokers out you guys are saying, but it's not like sorry, it's due to Canadian regulations. You know what I mean? It's due to Canadian regulations. It's not because these specific brokers just don't want to support Canadian clients anymore. It's because Canadian regulations are very what's the word? They're very strict. Right? Like, for example, IC Markets used to support Canadian clients. They stopped 2 years ago. Then Vantage was still good. Now they're pulling out. Vantage was good. Vantage was really good. But now Vantage, exactly, PMW, you get what I'm saying, right? Same thing. So now most of the options, you're either going to have to do your deposits and withdrawals through crypto options, or you're going to have to use a regulated broker, where I'm just going to use a actual regulated broker connected to Canadian and American banks for liquidity, such as Owanda, where they're just following Canadian regulations. So you know at least there will never be any issues with your money, and the head office is in Toronto too. It's only 1 to 50 leverage, which is the big difference. But I'm just going to put more capital into it that I've already developed through trading over the couple of years that I have saved up anyways. Because if you ask any of the capital hungry private members, I never tried to. I always started from lower amounts like $1,000, $500, and I never tried to grow that to 100,000 or a million or get overconfident or expect too much from the market. I always used to withdraw on a bi-weekly or monthly basis and then actually save that money in my bank account and develop my capital that way. And then, but yeah. So it looks like, you know what I mean? People have like weird expectations. So it looks like GJ, like we expected, that as that hourly didn't have a lower wick and it pulled up a bit, rejected around that 0.800 area, might give us that pullback to retest this structure. This pullback might happen over the next hour into Asian close, so let's just keep an eye on it, because we have the Asian close and the 4-hour candle close at 5 a.m. in the next hour. I sent updates on Twitter. No, sorry, where's the Twitter? I sent updates in Twitter and in the free analysis chat. This is the Capital Hungry free analysis chat. t.me/monsterfinanceFX. So I send updates in here when I'm gonna do something, as well as this Twitter. This Twitter here also posts like I also post the headlines and stuff like that as well. So it only has like 300 followers right now, but I'll post like updates. Like example here, I posted on Twitter when the London stream will be starting. And then this Twitter also posts news headlines, so go follow this Twitter as well. This free, right? Just I post like any analysis or trade ideas, stuff like that, headlines. Right? So this is another great free resource to get like your news information, headlines, etc. UK equity is doing a quick reversal here from that previous high peak. And dollar for this new hourly candle grabbed some liquidity and did not break previous lows or the bullish market structure just yet. You can see how it stopped on this zone and level on a dime for now. To see that continued optimism, I would like to see the yen drop to previous lows and US dollar break structure, and UK, Germany, and US equities continue on the upside. PM Dub, yes sir. This is like I in the market update webinars I talk more about the details of what we're looking for fundamentally and technically, but from these peak sell points and as we had a shift in market structure, we in Capital Hungry have also been on more of a sell bias as we had that market fear pick up, US dollar and yen pick up more strength, and the shift on that structure too. Just for this new week, we're looking for if we can get that squeeze to retest this structure, create that weekly top wick, and then continue down to new lows. But let's see how that goes, you know? Yes, sir. GJ, that's a pretty solid rejection at this previous price sensitivity area, where that could be just the hourly grabbing that liquidity and creating its lower wick. So now if we come above 0.800, we could actually take scalp buys up to 137. If we come above 0.800, we could take that squeeze. It didn't look, it looks like that was the pullback. We didn't get as aggressive of a pullback as we wanted. So watch that for another 20 pip squeeze to the upside if we come back above 0.800 there, okay? Euro USD, if you got an entry, it's only up like 2 pips right now. Just watch price action accordingly as it can play around this level. Gold is just messing around. I'm just going to identify this area because we're seeing some strong reactions in the lower time frame, and for safer sells we need a break below that point for that squeeze down to 1905. The good thing about EU, it's only up like 5 pips, but the good thing about EU is you can have like you don't have to risk too, like it's the same risk. I don't mean it like that. I just mean EU has very good spreads with most brokers because it's so high in liquidity, it's so volume rich. Is that the right word? You know what I mean? So you can usually have it's usually pretty efficient to scalp EU, if that makes sense, because you have a tighter spread, right? For most brokers, don't quote me on that. If your broker has a bad EU spread, that's just not good. Remember me from Rags Group back in the FOREX family days? Damn, that's a throwback. That's why I didn't know shit. That's when I was going through my trial and error. Straight failing at life. Getting pissed at Rags, this fat bastard. You fucking didn't teach anybody shit. How often am I trading the London session? I normally trade the London session anyways myself, but as per streaming, it's just going to depend how I'm feeling. Depends how much exposure I get, if people like it. You know what I mean? We got like 100 people on average. So if those 100 people show another 100 people, they show another 100 people, and everybody likes it and everybody's sharing it and they enjoy the content, then obviously you have more incentive to do it more often, right? How much I made in a year? It depends, because I started Capital Hungry in the 1 year. I had a good trading year, and I still worked a full-time job in financial tech for a Canadian bank up until like March. So I made pretty good money. We want to disclose that in case the tax man is watching this. My taxes aren't fully approved yet of what I gotta pay, so you know I don't want a reassessment increase. 2020 was a shit year because of like multiple incomes and very little expenses because everything was shut down, you know. School the gulag's in their own zone. The gulag's in their own game, you know. But one sec, my girlfriend just called me and it's 4 in the morning, so that's not good. Give me about 5 minutes. Yeah, this is great too. Next time I do the stream, I'll put that DVR option on so people can go back and forth, but like people can rewind the stream live. But when I save this and end it anyways, you can always rewatch these streams, and there's a lot of information shared, right? So this new 15-minute candle would be ideal if it just grabs liquidity at this area, fails to break higher, and continues up. Yeah, I messed up when I put the 360 view on the first time. What is in the private chat that's not here? Like a bunch of stuff. Like we've already done, like for example, this GJ buy analysis where we took the scalps above 136.5. We already did the analysis and update for that during Asian. And like I don't do these free streams all the time, right? So like for the private chat, to start the week, we already did our mental reminders. We already reviewed a psychology webinar. We did a full weekly recap and refresher webinar of what happened last week. We did like I sent out the economic calendar and notable headlines and weekend news headlines, so we already knew about what was going on with Brexit. We already knew what was going on with everything else, etc., etc. Political speakers throughout the week, market sentiment talks, mental reminders, some voice note updates, a market update webinar that was like already given ideas for gold, GJ, EU, 40 minutes, the charts corresponding to that, and then within the trade room you get session reminder alerts when sessions are opening and closing, other members sharing their trade analysis as well, price level alerts at key levels, right? So you also, like people like these are an example of the session alerts: New York session close in 10 minutes, London session close, etc., etc. Gold at key level, members asking questions, and like I share more updates in here as well. For example, like, and I always do polls for the members to make sure it's always quality, you know what I'm saying? Market updates, analysis, trade ideas, trades taken, news updates, all that. This is all key level price alerts like UCAD, gold, etc., Euro AUD. Then the newsroom. This is the newsroom where you get members get access to real-time streaming headlines as well. I just show it on the stream to be a nice guy. And then this is banter chat. And then of course you get access to all these educational webinars on technical and fundamental topics that are not on my YouTube, that are just for the private members. They're anywhere from like 20 minutes to a couple hours, you know? There's a lot of stuff. There's too much stuff to talk about. Oh, GJ. Anybody take that secondary GJ scalp squeeze? 15 pips. 15 pips. GJ broke the 1 minute. Anybody take that quick little support squeeze out there? 0.800 after that call? Yo, I'm giving you guys beautiful scalp trades here. You got 12 pips, Brendan. Andre, you got it. Let's go. Okay, secure. Leave secure, risk secure 10, 15 pips and leave a runner risk free. Because we're coming towards Asian close, you know? Yeah, just leave it. That was a quick, easy, impulsive, like 15 pips right there from 0.800. So as a scalp, as it's early in the week, we're just in the scalper's perspective. Unless you already had these trades you were holding from 136.5, this was a good secondary squeeze up for 15 pips. EU, anybody in the EU buy still? You're up like 7 pips. Once you get 10 pips there, or possibly just leave it risk free. Gold still did not break these lows on the 1 minute. It's beautiful to watch where the reactions are happening exactly on the dot. Would be nice if we get another retest of 1912 to grab liquidity, fail to break, and then go down. But actually, gold might break above 1912. Because dollar is extremely bearish now, breaking intraday bullish structure that we highlighted, right? So if that US dollar is weak, that should give us confirms for gold buys. And as of right now, I don't want to jinx it, we have seen sellers fail to break these exact same low points. So if we can break and retest above 1912, that's still the same safe buy option, you know? If dollar index is doing bad and dollar is weaker, that's more potential for gold upside though, because it's an inverse correlation. USD-CAD is just ranging. Yeah. A-Rod, usually I would scalp US30 through London as well. The only reason I don't want to is this London is because, one, it's not my active trading days. I trade Tuesday, Wednesday, Thursdays through London to New York session. And another reason is because we have Jerome Powell speaking Monday morning, like coming up through New York session. It is Monday morning right now. Fuck, man. Time flies by, eh? So we have Jerome Powell speaking through New York session, and we have those U.S. Coronavirus stimulus talks. These are going to be major fundamental catalysts to dictate the potential flow of US30. I personally don't trade Fridays due to PTSD when I was a fresh trader, where I used to have amazing trading weeks, and then I would get cocky and overconfident and want to triple it all on Friday and end up blowing everything and ruining my weekend. So I stopped trading Fridays for that reason. I don't think there's anything technically or fundamentally different on a Friday besides investors possibly closing order flow towards the end of the day, as it is the end of the business week as well. But other than that, you can still have great trades on a Friday. That's just my personal psychological reason for that. EU 10 pips. Let's get some W's in the chat. Anybody take the EU scalp idea for that 10 pips? Secure 10 pips, leave a runner. So far we got, yeah, we were it was on the stream, that spike up during Asian close. We were expecting that deep pullback. So far we got 30 pips on the GJ buys from 136.5, 15 pips on the 136.8 buys, that call, and 10 pips on the EU buy call. Gold still messing about, nothing yet. All right, I think those 40-50 pips allow me a water break. You guys got me running like a farm animal out here. I need to go to the watering hole. I'll be back. I need a horn. Do you draw your major key areas based on quarter theory? No, on GJ, these red zones are based on the quarter point theory in between the higher time frame key levels. The major key price levels are based on historical price points of significance, which is like, you know, a little bit of a secret. But yeah, secure some of those trades just because we have Asian close in 30 minutes in a new 4-hour candle. So on the new 4-hour, we can see some deeper pullbacks and retests of structure. So just leave your runners. Remember, in this webinar, we were just looking for potential scalp ideas in the scalper's mindset. We're just going for 10, 15, 20, 30 pips. And we got that twice on GJ, and we got that 10 pips on EU. So just watch it accordingly and don't be greedy. It's still early into the week. And especially with EU and stuff, we'll get more of a intraday bias based on Jerome Powell speaking. I think Christine Lagarde for the ECB, Euro Central Bank, is also speaking at 9 a.m. So just keep an eye that that's both going to have an impact on EU. And I want to see these stimulus talks, how that goes. Okay, UK government, Brexit, UK government to speak in Parliament later today as well. The 0.500, 0.800, 0.200, and 0.00 levels on GBPJPY are psychological price levels where investors see reaction on the lower time frame in between the larger 100 pip ranges following quarter point theory and just back tested levels as well. 15:30 London time, we're gonna have more Brexit talk, so watch out for that, eh? Still good. These are still running smooth. Okay, see what I was talking about? How sellers failed to break these previous lows, and we're seeing that US dollar weakness. So now another scalp we're going to see is if we break these 1 minute highs, we're going to get a breakout above 1912 and easy 20-30 pip squeeze. So keep an eye on that now, right? That's why on the 1 minute we can observe the price action, the reaction of buyers and sellers accordingly. We can see that buyers rejected at this previous point, and we do have this liquidity being generated here, where sellers are also failing to break these 1 minute lows in this price point around 1909 flat. Okay, so now if buyers break above this previous area of rejection and above our higher time frame key level, where we've also seen multiple intraday rejection before here, right, the previously last week, we will get a nice buy squeeze that we can take as a scalp above 1912. Get what I'm saying? And then you guys got to put more W's in the chat. You got to call me a fortune teller, and you guys got to, you know what I mean, like and subscribe and all that shit. But I'm going to get some water. Oh, sorry, I'm sorry, I didn't mean to. But that's just watching. That's how I like to watch price action, buyers and seller strength, reaction points. You can see we're reacting right at around 1912 right now. GJ giving that bit of exhaustion as we're coming towards that 30-minute candle close. Also EU. Dow Jones just pretty much ranged overnight as it's waiting for US stimulus talks and Federal Reserve Jerome Powell to speak. And GJ might also start to range as we have those Brexit talks coming too, you know? It's mainly crude oil that impacts CAD. Damn, I really jinxed it. I really jinxed it and got cocky. Rejected on a dot. The higher time frame key levels are different. They're just different. I shouldn't say anything, but we'll keep it on there. I'll be back in a minute. If anybody has any questions, just ask in the chat, and then of course I will answer them accordingly. Same of course with the private session. What do you got? Your EU buys, you got 12 pips. GJ, you got that. EU. What's my view on expectation on US30 until elections? Mainly just focused on the stimulus talks. Yeah, we broke that down. Damn, I really jinxed this. Looks like we were gonna get that breakout. Dollar's looking bare. Dollar looks like it's gonna melt. Like, look at this price action over the last few hours. The rejection at 93.8. The break of this bullish structure. Breaking below previous intraday lows now. Jack of all sales. Can I confirm following Fridays to avoid falling trap to the big market players? We should buy the stock markets at the low. Yeah, if stock markets ever hit those lows again, you should definitely buy. Or if it makes any historical lows, because when you're buying the stock market from those low points, you're buying with the Fed's support. Man, I really jinxed the breakout, eh? It rejected but anyways, obviously we didn't have the confirms because we were waiting for the break and retest above 1912, and it looks like this was not enough liquidity just to break above that just yet. Maybe through New York if US dollar weakness continues. No real significant headlines over the last 30 minutes or so besides the Brexit talks to come. EU still running. Um, any UK economic data, and then of course the secondary in the pairs against GBP. Any individual impacting factors for that? Oh, you took an early gold buy from 1910 to 1911. Oh, a quick 10 pips, not bad. Trust me, if we break above 1912, it will have a nice impulsive squeeze. But right now it's just playing games. You could see that on the 1 minute. See what I'm saying? You can see it rejected there exactly on the dot. You might not notice this stuff when you're just looking at like the 15-minute or the 30-minute, but you can identify this a lot better and more efficiently and more precise on the 1 minute. And people say it's extremely hard to like trade fundamentals and all this information together, but we're saying trade ideas over the last like 3-4 hours since we've been streaming, or 2-3 hours since we've been streaming. We're looking at the headlines and reading them. Like, we're looking at the impact on the US dollar or how equities are running and potentially more optimistic. It's not like it's that. You lost on a sell on silver. Oh, why'd you take a sell? What was making you take a silver sell? EU. You guys still got EU running? 12 pips now. 13. Blah. W's. Alright, I'll be back. Do I use my FX book for news? Bro, can you not see the big ass news, breaking news, live news on the left side of your screen? That's news. That's where I was reading those headlines. That's from a news terminal that Capital Hungry private members get access to. That's real-time streaming. These are like every minute they've been popping up for the last like since we've been streaming. Yeah, you're right. That's gulag. A big ass fucking label right there. I thought I made it nice. Live news with the breaking news headline. You know, it's a red arrow pointing down. That's fucked. Low IQ in the chat. No, I'm kidding, bro. It's all good. Maybe it's late, you know? So see how gold just hit this key level and it hit my trading view alert. These alerts get automatically sent to the Capital Hungry chat. So if we're looking for analysis at a certain price point, it gets automatically sent once price gets triggered there. You know what I'm saying? And it didn't break above yet. It's reacting there on the dot. Beautiful, beautiful stop in reaction on the dot. But you can see that those price alerts get automatically sent. That's just an example quickly in real time. Yes sir, yes sir. GJ, if you guys are holding runners, it's still in profit. EU 16 pips. That's what I'm talking about. Just like we expected. Dollars continuing its break of the lows, new 30-minute candle. Pretty bearish price action. Man, look at this. Come on, eh? Harmon, I'm blaming that one on you, buddy, in the private chat. That's your jinx this time. That before was me. This one's your jinx. That was right on the dot. Right on the dot at the key level, eh? What a big tease. What can you do? No confirms just yet. That might have been the new that might have just been the new 30-minute candle opening up and creating its top wick. Yeah, see, gold buys don't look so good just because this new 30-minute candle that opened up just grabbed liquidity right at that key level and has no lower wick yet. So that's not looking too good. We still need, it would be ideal to get that 30-minute lower wick made and then get the break and retest above 1912 if we have that US dollar continue bearish. This US dollar right now, this new 30, hopefully it just retests structure and then continues down for New York, and we can have that optimistic sentiment, US dollar weakness, Japanese yen weakness, Swiss franc weakness, equities more bullish globally overall, which we can then of course take the buys on gold. GJ buys continue, EU buys continue, UCAD sells if we break below key level 1.316. But we can see the rejection there for now. Obviously safer sells would still be below 1909, 1908 price point here. 1908.8, 1908.5 to 1909. That's that 40 pip squeeze to retest the bullish structure. Asian session close in 30 minutes or so, and the new 4-hour candles will be opening, so just keep an eye on that. As usually during Asian session close and pre-New York hours, you see deeper pullbacks and liquidity setting up for the North American investors. So yeah. I'll just be back in 5 minutes, 10 minutes. Yo, yo. Tanger Wangs. Nah. This guy. Okay. Okay, so there you go. There's that 20 pips up to 137. And you can see that we are reacting at that quarter point, 0.00 flat. So anybody who took the buys from 136.5 to 137, our analysis played out for those 50 pips. Or if you took the trade from 136.8 and left a runner, you got another 20 pips. For capital hungry members, this was already expected to get that squeeze above 136.5 up to 137. It is looking like those negative Brexit headlines are not really getting translated by investors as GBP negativity, even though it's a no deal Brexit. So we're just going to continue to play the lower time frame structure unless we really get key rejections at this 137, 137.2 price point. But for New York, it would be ideal to get a retest of 136.5 for the new 4-hour candle, or even 0.800 again, and then continue the ways up. Free money, right? That was free money. Look at the reactions. 137. A little box to box. It's beautiful, isn't it? Isn't it beautiful? EU looks like it might break these previous 1 minute highs, continue that extension up. UCAD has just been ranging all night. Dow Jones we didn't touch. If you look on the 1 minute, it's really just been in a lower time frame range as well, besides this impulsive move. Fairly messy. Waiting on those stimulus talks and Jerome Powell to speak during Monday. EU is nice. Anybody still hold GJ or EU still and left any runners or closed at 137? Zoom chat, YouTube chat. Oh, I didn't see the question. Sorry, I didn't even refresh those. Ichimoku indicator? No indicators work well. No worries if you're still just getting into the game, Carl. Practice is practice. And closed all first half of 137. Good job, Chris. Nice scalp. Pretty smooth 20 pips if you got in from 0.800. 50 pips if you're in from 136.5. Smoke up. I went to go smoke up. Got them GJ and EU calls. Good shit, Patrick. Beautiful scalps. Let's just take it easy now because 13 minutes till Asian market close and the new 4-hour candles. And we'll see how New York runs. Good reaction to 137 on the dot as well, eh? Jerome Powell speaking right at New York Open, 8 a.m. And then Christine Lagarde speaking 45 minutes later. Gold is still just messing about. We did not get those confirms to break above 1912. That 30-minute at least did create a lower wick, where before it did not have that lower wick created, so that's good to see. Just a better technical sign. Oh, you took a sell here from 137. If you got a good entry and you're risking some of your profits because you already, did you not catch the buy scalp up as well, Brendan? If you got a good entry right at 137, I would just watch price action accordingly and just be cautious of the new 4-hour candle as well. This 4-hour candle is closing quite bullish. Yes, it's still in bearish market structure from an intraday perspective, but we are respecting current bullish lower time frame price action and market structure, and this is quite an aggressive bullish close as well. You could get a nice scalp from this point as we were expecting sells from here, but so far that no deal Brexit by what we've seen over Asian session and New York session, and with the market gap initially at like 5 p.m. Eastern, of course, we didn't see too much negativity. Like I was honestly expecting GJ to have an aggressive gap down during market open from those like no deal talk, like no more trade talks, no deal Australian style. But we didn't get much of a market gap. We didn't see too much negative pressure on GBP by investors through Asian session or through London session so far. Yeah, so just watch it accordingly. We're getting on the hourly, this is looking like bullish liquidity, and we're correcting this downside move. We do have this resistance, of course, and the key level 137. And of course, safer sells would be if we break above 137.2 after a pullback at New York. EU beauty. EU looks like it's going to run straight from like that range, that exact 25 pip range to range we're expecting, just to retest these previous highs on the hourly here, right? And then if we break above that, of course you have the full 50 pips pretty much up to retest that bearish market structure. But that's pretty nice. EU is smooth. Oh, there you go. 25 pips, 25 pips, done. So we had 50 pips on GJ, but initially a 30 pip call with exact instructions of what to look for, a 20 pip call, and we had the EU, exact instructions, 20 pip. Not bad for starting the week, just for some scalping trade ideas, looking at the 1 minute and lower time frame price action at key areas of interest, looking at US dollar weakness and understanding the impact that has of on market sentiment of showing more optimism, the Japanese yen, digesting and understanding that even those no deal Brexit headlines still did not bring sellers pressure to GBP so far over Asian session or London session, or as it didn't cause a market gap at the market open. And then just using all that information hand in hand to execute and call some trade ideas, you know? Yeah, Brendan, why? Yeah, watch those. Be careful with the sells. Still looking bullish on the lower time frame, you know? EU close enough to where we said it was gonna go for a scalp. Come on. The only trade that didn't follow through yet that was called is the potential buys above 1912. But US dollar is still weak. We are creating a little bit of a lower time frame support here, and especially as sellers fail to break these 1 minute lows at 1909. But we do need that break above higher time frame key level 1912. And then we'll get a nice impulsive squeeze, 20-30 pips. Yeah, good job. Yeah, don't. Yeah, good job closing that. Yeah, we just did a full week of what other streams be doing. All right, we just ran a full week. Even though I might only do this a couple times a week, look at how look at how rich and tasteful the sessions are. I don't know what I'm saying. It's getting late. It's been a lot of hours now. You know, too much talking. But the trades are great. Okay, okay. Are we getting blessed with that? Are we getting blessed with that? Another squeeze, that squeeze, or is it gonna tease us? Oh, I don't want to jinx it. I don't want to jinx the candle close below key level. I don't like how it closed below the key level. This has been your only profitable Monday session. I'm glad I helped you with that. That's sad to hear, but I'm glad it's happy to hear that I helped you with that today. Yeah, and these the whole all the concepts behind watching the 1 minute price action at areas of interest and like higher time frame key levels, it doesn't have to be used for just scalping. You can use this for entries for intraday trades, swing trades, doesn't matter, you know? Yeah, this is a beautiful start to the week. That's why I wanted to stream today, and that's why I wanted to do this live session, is because I was just feeling it. I was just feeling awake. I had a nice workout. I have meal prepped and everything already. Already sent the weekly flow and stuff. I was just feeling extremely interested to know how the Brexit headlines were gonna get digested. Like this stuff just interests me. And I was just feeling it. So I was like, yeah, we might as well just do this while you're feeling it, you know? Gold's teasing. Gold's teasing. Shouldn't have said anything. GJ still rejecting around 137. EU ran good. All right. UCAD has been ranging. Is that because oil's still holding bulls? What's oil at? Yeah, oil's just been ranging overnight. Just did an up down move. Nothing too significant. Yeah, Brendan, just get some rest. What time is it for you? It's still early in the week, and there's still gonna be other trading sessions. Sorry, I didn't see all these messages. If you guys like this stuff, if you want more trade calls like that, then you know I got you. But you guys have to have me as well and share the stream around, share it with other traders. How many of you have paid for trading courses in the YouTube? First of all, okay, Rakil Wixton calls his YouTube chat the gulag. I don't want to call you guys the gulag because you guys, over a time of watching these sessions, you're going to be smarter than the gulag automatically. Trust me, you're just going to naturally, even if you can't read, if you can at least listen, you will be smarter. You will be smarter than the gulag just by listening to my voice. Okay? Facts. So I don't want to call you guys the gulag, but you guys are not capital hungry level just yet, unless some of you are in capital hungry already. So we have to have a name for the YouTube chat. I need some ideas. I need some name ideas for the YouTube chat. The apprentices? Nah, that's too nice. I'm gonna call you all the janitors. Nah, that's pretty rude. The janitors. The love nest? CH gang isn't too bad. Oh, the spoon feeders. Or the spoon fed. No, the spoon feeders? Spoon feeders a good name. Bro, don't kill me. Window lickers. It said window lickers. Spoon feeders, window lickers, these are good ones. The market monkeys, that's a good one too. Team anti-savage, young bulls. Alright, you know what? I'm gonna come up with Capital Horny. Capital Horny Gang's a good one too. Capital Horny Gang. No problem, Andre. Take care. Refugees. The refugees. Now I'm calling you guys the refugees. You guys are the market refugees. You guys are on a ship. I don't know what country you came from together, but you guys are sailing around the market ocean completely fucked. Your ship's broken down. You guys have completely crashed your accounts multiple times over and over again. You guys are the market refugees looking for escape, looking for support, looking for a home. Yeah, I don't know where y'all came from, but I'm gonna give you guys a little bit of support. I'm gonna give you guys some market hope, some shelter from the epic market waves. Kenya. I'll come up with a chat name, alright? Don't worry about that. I'll come up with a chat name. Right now I'm just gonna call you guys chat. Refugees is funny though. Market refugees. Because most of the time the chats are like, they really don't have too much knowledge. I'm not trying to be rude, but you know what I mean. I'm not trying to be rude, but what do you guys? Where else do you guys get your information about the markets from? Like, what other streams do you guys watch? Be honest. What other what other courses have you taken? I'm not judging any of them. Like, was it from like a marketer? Was it somebody good? Did you actually learn something? Be honest. Who the fuck is Steven Bigelow? FC Millionaire? Who's FC Millionaire? IML. FX Millionaire. Who's FX Millionaire? These are terrible names. You trusted someone named FX Millionaire? Rakeel, that's not bad. Rakeel isn't bad. At least Rakeel, even though he doesn't focus on like fundamentals, he has a shit ton of content on all the stuff he does focus on. So I'll give him that. And I'm not trying to be cocky or anything, but do you not get a ton more, a shit ton more information on fundamentals, technicals, market sentiment, content overall, and value from these streams than a lot of that stuff? Right? Damn, you're from Daniel Savage and Lambo, bro. All you know is Fibonacci, bro. That's all you know. If you're from Daniel Savage, all you know is support, resistance on 15-minute and Fibonacci. Tell me that's not facts. That's all you know. I was kidding. Forex broker killer? Who's that? This guy kills Forex brokers? Seed's not bad. Monty streams. I've been a guest on Monty streams. Black box trading, that guy's sick. But he's more into like the algos on that side. Astro FX was terrible, no? Urban Forex? How many of those people actually actively covered like fundamentals and technicals like higher time frame analysis to lower time frame, market sentiment, like news headlines, economic data reports. Probably not much, you know? Samuel Leach, Batman. Eleanor? No, I have no idea. Honestly, I have no idea about a lot of these names. This just goes to show you how many people are out there as like marketers or selling courses and stuff like that. Did any of those people, and this isn't disrespecting any of those people either, did any of those people actually teach you about financial markets? Did any of those people teach you about financial markets? Any of those? Or like, you know what I mean? Economies. Be honest in the chat now. Out of all those names, did any of them teach you about actual financial markets or anything about economics on that side? Yes, nope, yes. Nope, nope. For sure. True. Inflation, interest rates, a bit. Illuminati research. No, I'm just curious. I'm not like I'm not judging anybody. I'm not like judging other courses. Just because now I'm talking to you people, like we're coming towards the end of Asian session. London session is starting to slow down a bit after we caught those moves. I'm just curious about like what a lot of people have received as per value with other courses and stuff like that, and if it's helped them. That's all. If it's helped you, that's amazing. That's great. If it hasn't helped you, then like obviously that sucks. But I was just curious, you know. That's good, Vikram. Back testing that way. That's how I test. That's how I first started diving into the fundamentals. Was like I would back test different major news headlines or economic data report releases to see the technical impact on the charts. You know. Yo, should I get a webcam? Everybody wants me to get a face cam. I gotta see where in my room I hear. Where in my room here I should set it up though. So gold, still no confirms for the safer buys. Let's see how the US dollar's moving. Dollar's still bearish. So we should get that gold breakout above 1912 soon, in my opinion, for that quick squeeze before this stream ends. Dollar's still weak. Equities are still fairly strong. EU still running smoothly. GJ is just showing exhaustion at 137. No, I'm just getting tired. Get a webcam. Not sure if fundamentals are needed. It's like explaining the move after it happened. That's actually 100% like the reverse. The fundamental catalyst comes the fundamental catalyst. Okay, read this. See this? I'm doing a webinar on this on this topic for the Capital Hungry private chat. Let me make it a little bit smaller, but you guys won't. Okay? The market is made up of buyers and sellers. The market we trade are the currencies represented by the value of economic strength and other factors of the correlated countries. Okay? When these markets are being traded, investors base their financial market decisions on several real-world factors because these are trillion-dollar money markets with dozens of banks, hundreds of banks constantly doing exchanges every second on the high frequency side of trading. And on the low frequency side of trading, you have massive contracts and deals between global banks, hedge funds, and other institutions. But these market decisions are based on several factors. Contracts on institutionally between different institutions across the world, economic data, global economic events or any events that can impact economies, human psychology and investor behavior, profit goals, and also banks target each other too and target each other's algorithms, but that's a whole other conversation. So these real world decisions based on those several factors by investors as a collective on the grand scale paint the technical charts. Okay? Otherwise, if you think the technicals come first, tell me what paints that picture. Why is GJ going up? What is the cause of that? Why are banks choosing to push the price of it up? It's not just randomized. It is not just a decision between one or two banks. You understand what I'm saying? When you see the money move through the market and you see intraday moves, or you see extreme market optimism, or when we saw extreme market fear with coronavirus and those that led to economic lockdowns, right? That was a collective decision by smart money, by banks to move their money from risk currencies to put it into safe haven currencies, put it into gold. It's just money moving from hand to hand, from one trading instrument to another, keeping their money safe and also making money on it over time. That's why they're called safe havens. Okay? So these real world decisions, this movement of money, these fundamental catalysts, headlines, buyers and sellers working hand to hand on a lower time frame perspective, from banks working with hedge funds on a macro perspective. This is what prints and creates the candles you see in front of you, the market structure, the trends, the highs, the lows, the impulsive moves, the times of the periods of indecision. It's not, there's no fucking mystery here of what came first, the chicken or the egg, unless you're mentally retarded. It's 100% first, these fundamental decisions come before the technical chart. That's what's happening behind the scenes, based on those dozens of factors. Economics and financial markets have been studied for decades. And some Joe Schmo thinks this shit is just some magic lines. You know what I mean? Like, come on, think logically. People go to school for years to learn about economies, economics, how it all works, the markets themselves, and be able to trade. You know what I'm saying? Just common sense. You get stopped out and wait for the market to recover and price action set up, but why it happened doesn't really matter. It does matter because if you understand why it happened, you can also prevent yourself from getting stopped out as often, and you can also potentially create trade ideas with higher probability by understanding the fundamentals. You're trading real world financial markets. You're not trading some made up fairy tale line on a chart. Like, come on. That's like, man's confused, doesn't know if the chicken came first, the egg came first, doesn't know what to believe, doesn't know what's real. There is real world impact when there is an interest rate decision that is going to have impact on that specific economy. Investors translate this information and either buy or sell or move their money around to either make more money or keep their money safe in the market. And the market is massive. Yeah, so anybody who says like the fundamentals don't make sense, I honestly think they are just not, they might not be They might not have enough brain cells to actually understand how it works or how economies work. These are the same people who probably don't even know what an interest rate is or how taxes even work. You know what I mean? So how would you expect them to understand the fundamentals of the financial market? You know what I'm saying? You have to be extremely ignorant and close-minded and just extremely unknowledgeable to have no idea like about the fundamentals, about the impact of fundamentals, and how that is what paints the technical picture. The trends, the patterns, they come from human behavior and repetition. They come from historical repetition based on economic events. Whether it's predetermined or not, whether it's biased, who cares if it's biased? It's the economies are corrupt. The whole world is corrupt. You think things are fair? You crash your account every other week trying to trade support and resistance. It's not bias. It's just the way the world works. The world is corrupt and based on money and power. It's based on control. So you have to think in that same fashion. You have to think how smart money is moving. You have to think how they make money. You can't think the same way you think like a farm animal. You have to think bigger. You have to think smarter. You have to think sharper. And you can't just give up when things don't go your way and say, "Oh well, I don't know why that happened." When you have the resources and you have the tools at your disposal to go and understand exactly why it happened, to go increase your knowledge on that concept, because you're in a game where your enemy is constantly evolving and getting better and faster and stronger and smarter. You're in a game that went from having banks with manual traders on the desk who were trained to be proficient, to going into automated trading, to going against supercomputers now. Your enemy is constantly getting, the field you are playing in is constantly getting smarter, faster, and better and better. While you choose to stay stagnant, while you choose to stay unaware of certain things that can give you a trading edge, while you choose not to grow your knowledge and only stick to bare minimum basics, but in reality that has not brought you any success. But because of that ignorance, you don't want to try to do any better because you feel stuck and that road feels very long ahead to learn all that information, to put that time and effort ahead. But the more time you waste, the better, faster, and stronger the enemy gets, because it's just all technology based now. There's a reason the Bloomberg terminal for economic data report, for economic news, for information, there's a reason that Bloomberg terminal costs $25K a year for retail traders, and plenty of them around the world buy this Bloomberg terminal, as well as different companies, for this information, because they make that money back quite easily with the information provided, right? But there's a reason that costs $25K a year, but TradingView is free if you just want to go start looking at technical charts. You can start looking at technical charts for free anywhere. Yeah, gold. Oh man, gold teased hard at 1912, eh? Dollar still bearish though. Gold just grabbing liquidity. Can you help me out? You're a poor Punjabi guy in England. So I was a poor Punjabi guy in Canada. What's your point? Go get a job or something. What do you mean? Like, you know, plenty of jobs opening up now. We're getting that full. I'll close that by accident. Yeah, I've been working since I was 14. Gotta go get a job. Get 2 jobs. You got the time if you really wanted to. If you really wanted to and you didn't care about people's judgment and you really wanted to be on your grind and you wanted to save money, you could cut out all bullshit out of your life. You could add physical activity into your life. You could start eating better. You could have 2 jobs. If you really, 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 really wanted to grind it out, really want to build capital, save money, you could easily fit in a 24-hour day, sleep, enough 4 to 6 hours of sleep, 1 hour of physical exercise, eating better to improve your physical health, studying the markets for an hour or 2, and getting a full-time job or multiple part-time jobs or a job and a job on the side, doing some shit online for Fiverr. You guys said you're all Indian. You can probably do some tech shit online, man, for fucking extra cash. But do people really want to make that $10 an hour? Is it worth it for them? No. But then they cry about not having money. They cry about being broke. But you ask them, would they do this shitty job for $10 an hour? And they say no, because they think they're better than that. But you're actually not. You're a broke fucking idiot who doesn't want to work for his shit. You know what I mean? Like, I've been working since I was 14, so I hate lazy people. When you have the full function as a human to get multiple jobs, to do all those things every single day, if you truly want to, but you probably don't want to. $24 hours a lot, right? Oh, just cleared all my lines. But anyways, we already went to this part. I don't know why I cleared all that. Oh, yeah, this is a different layout. Yeah. Let's talk about it. You got 24 hours in a day, right? How many hours you guys sleep for? You only really need 6 hours sleep, really. You can sleep for 4 hours if you got the balls, but probably don't. 6 hours of sleep, right? Most people work 8-hour days, 9-hour days. No, most people don't have to commute now, but let's say you have to commute as well. Okay? Let's say commute plus work, 10 hours work. All right? What else then? What else do people do? Because I'm just trying to see what you average Joe Schmoes do on a day. Bizzletree, you are on semen retention, not by your own choice. That is just because, you know what I mean? You can't get any women. That's not a choice. That's just your life. But anyway, so what do you do? Cooking, eating, let's say. What else? Tell me what you guys do. Okay, because we can easily do this. 10 hours of work, so we're at 16 hours right now. Let's just say eating, cooking, prepping food, taking time to shit, piss, all that stuff is 4 hours. Right? Now you're at 20 hours. Let's just say you go to the gym for 1 hour. Now you're at 21 hours. So what do you do for that extra 3 hours? That's a lot of time. 3 hours is a lot of time. And that's if you actually work 10 hours. Most of you guys, most of the people who say they're broke don't even have jobs. That's the craziest thing. Like Bizzletree, do you have a job? Be honest. Be dead honest right now. Tell the truth. Let's see. Yes? Okay, fine. That's good. I'll give you that. You have 2, Smile? You're a hustler. You guys are hustlers. I like that. You know what? This is a much better chat than the Gulag chat. This chat has potential. This chat has great potential. Anybody still holding GJ runners? Because even if you're holding 0.800 risk free, you wouldn't have got taken out. So anybody still holding EU and GJ? The EU is from here, right? 1.72, 1.725. The lines got erased. EU 23 pips. GJ still active around 137. Looks like it's going to head up to 137.2. Dollar still bearish, breaking previous lows, looking like it's going to head to 93. Gold just been playing games. Hopefully this was the liquidity grab now, where it can bust above 1912 before we end this stream. We've already had Asian session close. Let's just see how the new 4-hour candles look. This is a very strong bullish candle close. If this 4-hour can already just, as it's already made its lower wick, we have the US dollar fairly bearish. And if we can get that break above 1912, I can see that squeeze to retest this bearish market structure around 1920 or to our key level 1923.5. The only thing that I want everyone to be cautious about is, yes, the dollar's having a nice sell-off over Asian and over London session to start off the week, but we have Jerome Powell speaking in 2.5 hours, the head of the Federal Reserve, and if he speaks about economic downside risks for the US economy and he speaks about more financial stimulus being needed, this will give the US dollar a boost as it's bringing fear to the North American markets. Okay? So keep an eye on that through New York and an eye on the US stimulus talks. Otherwise, if he is more optimistic with his sentiment, and we have equities continue up through New York session and US dollar continue to be flat, Japanese yen go bearish to retest previous intraday lows, then we could have that potential for some more GJ upside, more EU upside, potential for the UCAD sells below key level 1.31600, and then gold, we're just waiting to see how it grabs liquidity and if we can go back above 1912 for safer buys. No, the other seed stream is good as well. Monty stream is good. Obviously Rakio stream has the most clout, and he's good at what he does. Just the Asian stream, I just hate Protein Paul. That's it. That's the only person I hate. Asian stream's the worst, man. Those are the fakest FTMO trading bunch of cult idiots I've ever seen in my life. I hate them all. I hate that. Rakio made him too. Rakio made him. Rakio only supports him because he sells magic keys. That's the only reason. If he didn't sell magic keys, man, he wouldn't have any clout from Rakio. It's terrible. Worst stream ever. Worst stream. Worst information. Terrible trader. I don't know if I would recommend FTMO. It's just better to trade with your own money. But it's bad when people pretend to be mentors or full-time traders and they're trading FTMO demo and they never even shown anything, you know what I mean? But whatever. It's terrible. Just make sure wherever you do sign up, you pay for, or whatever you watch, you actually get value. Like, don't just get hypnotized by nonsense. Use your brain. I have no idea who else is the best. I've only been exposed to like the FOREX family and then just studying. What are you guys talking about weed prices in the chat? What the hell? What's wrong with this chat? No, you guys fit in. You guys fit in. Thank you. Thank you for pointing out my charisma. I appreciate that. Talking for like 3 hours, you know? Yeah, I am. I would only look for sells at this point if we start to break, because we have some strong lower time frame bullish market structure developing here, where even if we get a rejection in a pullback for pre-New York and a pullback to like 136.5, that could just be a pullback for pre-New York and then a continuation up, right? So safer sells at this point would only be below 136.500, because then we'd be coming below the key level in previous intraday highs, breaking the bullish lower time frame market structure and canceling out that upside. But otherwise, if we continue to respect this lower time frame bullish market structure as buyers are peaking intraday highs to start off this week, we're probably just going to continue to play in this structure, peak new highs, and then play that market wave. Play a little upside. German equities. Not looking too bad. Oh, EU. Call Lee. W's in the chat. W's in the chat for EU. W's in the chat. Let's go. Gangsta. 30 pips. 30 pips. Joey, man. I already talked about the higher time frames, everything. I can't do it. I've been talking too much. Actually, the stream is coming to an end soon. It will be ending shortly. I'm sorry about that. I know you guys don't want me to leave. No, don't. You don't have to be sorry, Joey. That's kind of you to apologize. I like your attitude. No, but it's just because the stream's ending soon. You know what I mean? So, this is gonna be saved and posted back, and then you can of course rewatch this where we're talking about. But GJ, we were looking for the new week. See how capital hungry? We got the Asian session close alert and all that. Okay, yo, gold's gonna pop soon. Before I end the stream, gold's gonna give the quick play above 1912. Watch. GJ, higher time frames. We were looking for a price for the new week to at least test this bearish structure at 137, which we did. The break and retest above 136.5 on the lower time frames, and then playing above 0.800 psychological price level. Now, as GBP is still looking more bullish, markets are more optimistic, and the lower time frame is bullish structure. I would only see sells if we rejected here and came below 136.5. Otherwise, if markets are looking optimistic and if we get a break above 0.200, I see further buys to the upside. You know what I'm saying? Because right now, GJ lower time frame, like we almost just peaked to the bearish structure in 137.2 as well, right? So these buys played out very good. It's a great start to the week. Yeah, yo, relax, Yende. What are you fucking? This man spamming a chat with only 20 people in it. I see your message. It's not like when you send it once it disappears. Did you just gapped quickly on the 1 minute? Gold really teasing around, but anyways, EU 30 pip. Oh my god, EU baby, EU going straight to the 1 hour that other target, the 50 pip target, That's what we like to see. Is UCAD finally dropping? No, it's not. UCAD should follow through by New York session. Dixie took a nice drop coming to the key level. Beautiful, beautiful stream today. Great stream. Lovely, just simply lovely. Look at this new stream layout. Breaking news. You guys like that? I made it myself. The graphics. Beautiful, beautiful. 40 pips. We're gonna round it off and say it's 40 pips. Yo, Trick Talk, take it easy. Man said I need this like a crackhead. This guy. EU is beautiful, beautiful trade. No, it's okay. I have good discipline. I've been trading for 3 years now. I've seen hundreds of pips on the 1 minute within minutes. You know what I mean? This is a beautiful trade. It's not like I don't really give FOMO that much anymore. I trained that out of my system. Did GJ freeze or something? What the fuck's happening here? I'm doing intraday trades. But I trade Tuesday, Wednesday, Thursday. But still, that's 50 pip call on GJ, 30 pip call on EU. That's 80 pips in a session for a scalping session, you know? Hungry refugees got fucking fed. You guys got that government relief. I'm the government. Trust. Listen, all I ask is share the stream around. Send it a like, subscribe, share the stream around to your friends and other trading groups. Can you start a challenge? You guys want to do a challenge 1K to 10K? Like we all put in 1K and just take it to 10K? Yeah, sure, if you want to. I'm going to be aggressive with it though, because 1K is not that much of a start. But I only have 30 days left with Vantage. So if I do a 1K to 10K challenge with you guys, and it's on Oanda, it'll be drastically different to the lots we'll be able to use. Because I'm going to have 10 times less leverage. That's why when I go to Oanda, I'll be depositing a larger amount. And being a lot smarter. Gold teasing hard, so we'll just leave it at that. EU is a beauty. Dow Jones was just ranging on the 1 minute. We played that US dollar weakness in anticipation on the break of the structure and optimism very well. For Canada, Oanda offers max 1 to 50. Did GU move up better than GJ just because of that US dollar weakness? Just because they're both going to move up very similar as you have a risk currency against the safe haven currency? No, it's pretty much the same. I thought with that US dollar weakness and now we saw EU pump up quite a bit, we would have saw GU do a similar move, but GU and GJ, exact same structure on the lower time frame, same reactions and stuff too. Pretty much a mirror. Yeah, I'm surprised with this US dollar strength. Gold didn't break above 1912 to give us that scalp squeeze. That was the only trade that didn't play out. But our intraday analysis is being respected so far. I don't know if 1912 will hold, but we did expect from Asian session that we would break above 1902 to start the week off and pull up to 1912, then reject. Yeah, because market optimism. The US dollar is a safe haven currency. That's why I like to look at it standalone. That's why I just like to look at it at the actual dollar index. Just stare at the dollar index and the Japanese yen index. Why are they up? Well, usually smart money investors, the people, the 1% who rather have the corporations and the banks winning, right? They would rather have optimistic markets because optimistic markets supports equity strength and risk currency strength as well. So it increases the value of the currency correlated to those countries, whether it's the risk currency such as AUD, GBP, Euro, CAD, etc., or into global equities and global stock markets, right? Because they make a lot more money with those corporations and investing in that. even though market fear can be very strong at times due to economic uncertainties, um, usually market optimism is a lot stronger. For example, coronavirus, when we saw markets take that crash, as soon as the central bank started jumping in and they started waving off some of the economic fear as economies opened back up and we got out of lockdowns, we actually saw a full recovery on global equities before we even came out of full lockdowns. You know what I mean? GBP UK shopper numbers across all retail destinations fell 3.1%. It's not that bad. Coming towards 6 a.m. What is this? See, I just got a reminder email from Vantage right now again about the Canadian trading accounts. A reminder that unfortunately Vantage FX has extended the decision to cease providing services to existing clients residing in Canada. We advise our existing clients residing in Canada with open positions in their trading accounts to close positions and arrange their funds to be transferred to their bank account by November 30th, or they will be force closed. You can still do withdrawals after that, but nothing else there. Yes, this is a live news feed on the left side. Smile. Beautiful, right? It's sick. Yeah, it was because of those Brexit headlines. I think we're like everybody was expecting those headlines to be negative, but after Brexit has been going on for so many years, I think it's more like it's more taken as a positive that at least some type of economic change is going to come. Like I wouldn't be surprised if we see Boris Johnson talking about like the UK will come back stronger than ever. We're going to develop better trade ties with other countries. We're going to develop the UK economy even better than we did before, etc., etc. And I was talking about some potential historical repetition at the start of the stream that you can rewatch when we were looking at GJ, and you can get more information about that if you come here and watch the GJ timeline of GBP fundamentally and current analysis. This was 3 months ago, so it's not current analysis, but this timeline will show you what we would need for potential optimism and to get a potential repeat of history from these macro lows and these higher time frame lows on GJ. Yes, sir. It might be a dumb question, but if there's a negative correlation between the US dollar and US equities, why did they both rise in 2019? Like when during 2019? Because it wasn't like a continuous correlated rise. And it's not always a negative correlation between the US dollar and US equities. It's just more prominent when we've had a lot of this economic uncertainty, because that brings out the US dollar safe haven appeal to investors, right? So for example, when coronavirus first hit the markets, you would see that the US dollar was extremely bullish at that time, and of course equities took that crash because you have that mass fear sentiment and you have investors putting their money into safe haven currencies. But then as the Fed started printing out more US dollars and leading to a bigger oversupply of US dollars, and also flooding the US economic market, then of course we had equities rebound, and the US people, the workers, get that economic stimulus. And of course then we had US dollar turn bearish because there's oversupply and under demand due to that Federal Reserve printing and US stimulus. I don't know if gold is going to go above the 1912 zone because I'm not a fortune teller, even though sometimes I seem like it, I know. But if it does break above 1912 and the US dollar is continuing bearish to 93.3, we should have some nice clean buys to take up the ranges to the upside. Like we were talking about our intraday analysis, as we can see on the 1 minute, sellers have failed to break these 1 minute lows multiple times, and we are developing some minor lower time frame bullish structure. Yes, the treasury bonds. Oh, here we go. Gold. Let's go, baby. Actually, I don't want to jinx it. Every time we said that, every time we said that, this happens. I don't want to jinx it. Damn, gold capping hard, right? Unless this 1 minute candle flips. EU still running. EU's 40 pips. I can say, when I send the recap, I can say EU was 40 pips. GJ was a 50 pip. Nice call for anybody who wants to rewatch this webinar. Damn, that's a heavy jinx by me. Not too many significant headlines. Coming towards the hourly close, 6 a.m. pre-New York. We've been streaming for a few hours now. So you know what? We caught, let's just review. And you guys can obviously rewatch this. But as we identified, lower time frame bullish market structure developing on GJ. The psychological price levels being used as supports as well as the key levels. A break and retest of this bearish market structure highlighted from these sell points here, where we saw sellers jump in the market. We saw a break of this structure and a retest and support created. So we are following our analysis that if we have optimism through London session and that break and retest, which was very quick at 136.5, or just that buy stop people were putting at 136.5, we could see that squeeze up to 136.8 and 137. So then we took that initial 30 pip squeeze. Then we had that pullback. People still held their runners. No reason to close runners, as they would have not got taken out risk free. Price broke and retested above 0.800. Another 20 pip squeeze up to there. Almost 30 pips now because it went to 137.1. So couple of separate scalps. That was a big tongue twister for me. But overall, around 60 pips from the 136.5 upside that we were also predetermining from our intraday analysis if we did break above there. Gold, we were waiting for buys above 1912 as we had overall lower time frame bullish structure. We had the US dollar weakness, as well as on the 1 minute we were creating this consolidation in order flow generation area where sellers were failing to break these 1 minute lows, but we did not get the confirms of the break and retest or the clean breakout above 1912 key level where we saw those previous intraday reactions. But we did expect this upside anyways on gold from 1902 up to 1912 to at least create an upper top wick for the new weekly and for potential sells from this point. But that is now shifting, as we have noticed the US dollar is a lot weaker and the markets are more optimistic, and that US dollar and gold inverse correlation has also been more prominent, right? So we stayed away from any gold sells and we're more on a buy bias with the structure, the US dollar weakness, and the lower time frame price action. EU, we identified this lower time frame bearish market structure as well as a lower time frame support being created at 1.705, and where buyers were previously rejecting and failing to break around this order block area we could see identified here. That is why when we failed to break these low points and we started identifying US dollar weakness, we said a break and retest above these 1 minute highs which we did get perfectly here, would be the ideal scalps to watch up the ranges. Initially 20 pips, and then we got a break and retest there to extend the trades for almost 40 pips there on EU. USD CAD, we're expecting the US dollar weakness to give us better sells on USD CAD, but it pretty much ranged throughout the night when you look at the 1 minute here and didn't give anything too significant. And then Dow Jones we stayed out of, and we were primarily watching the dollar. Oh shit. Gold, okay, breakouts there. If anybody took any breakout entries, just be careful. We probably will still get the retest. This is a new 15-minute candle. Let's see how the 15-minute time frame is looking. It is looking nice and bullish. I do not want to jinx it. Let's see if we can get that hourly candle close above, or at least get that scalp squeeze for that final move before I end this stream. But that was just a quick recap. Oh, that was a big... Let's see what happens here. I want to jinx it. But I'm getting tired. I am going to end this stream shortly now. Hopefully everybody enjoyed it. If you enjoyed the stream, just subscribe, send it a like, share it around on your social media, share it around with other traders in trading groups, and I will do this more often. Just for gold, wait for the new hour now anyways, because you know what I mean, it's just chilling right there. Just wait for the new hour, because we're coming towards this end of the hour here anyways. It's pre-New York. We didn't get that clean break and retest just yet. And yeah, the news headlines we watched overnight, we watched price action, market sentiment, fundamentals, and we had a good time for a few hours. W's in the chat, likes in the chat, like and subscribe. All right, take care. I can't even speak anymore. I'm so sleepy. Take care.